right now, and due to the absolute massive scale of the current Bitcoin network, the
Okay, Misconfig. Wait, Alesh, I'm really sorry. I'm really sorry. So what happened was, and I'm not kidding, I wish I was kidding, but I'm not kidding. We had a fail start, but everything's fine. Everything's fine. We did not broadcast the beginning. I'm not even kidding. I'm sorry. Because I was seeing the preview and I thought that this is live, but it was just the preview, right? And apparently I haven't clicked the go live button. And I asked the people in the chat, how is the sound? Could you please confirm that the sound is okay? Like, because, you know, my mic is one input and you're another input and I need to change some sliders in order to, and I'm like, how's the sound? And people are like, we don't hear you. And I'm like, refresh or something. And other people are like, we don't hear you. And I'm like, but I see the preview, right? I see it. I just see it with my own eyes. I'm like, it definitely works. And apparently it was not working because I haven't clicked the go live button, but it's fine. Now we're sure that everything's gonna work because I fixed the settings. Okay. Go for it. So we have 1 minute. I'm really sorry. It's absolutely 100% my fault, but at least it was a brilliant start. Now I'm gonna like, funnily enough, go over it quickly and then we're starting normally. Okay. My bad. By saying giving me a second, you need a minute, 2 minutes, 30 seconds. Okay, we're starting. Just a second. Okay. Yes. Oh my god, I see already the audience, my dear viewers, started with the jokes. So we have this joke that is, we are live by the way, we have this joke that is efficient, effective, because I was trying to translate efficient and effective to Bulgarian and I couldn't remember, like, you know, how to translate them, and I was translating them to one word and I was like, but they're two different words. Efficient means one thing, effective means another word, and in Bulgarian I just couldn't pinpoint both words how they translate. Anyway, so people started memeing already, and apparently, anyway, it doesn't matter. So we're starting. Okay, so what is it? Today is, just starting in English. Anyway, today is 24th of July, 2021. Bitcoin's price like 33, 34k or whatever. My name is Plamen Andonov. Joining me as a co-host is Alesh, and our guest is Misconfig, who we're just gonna jump straight into him, introducing himself, as we had a super quick 5 minutes fail start where we already were talking about Bitcoin and the meaning of life and so on. But anyway, let's resume. Restart. Okay, and after that, just quickly again, because I have memories from 5 minutes ago when we had the fail start, I mentioned that actually Bull of the Year said that he's fascinated by Bitcoin, and I mentioned that recently in a podcast, someone said that Bitcoin is an inevitability. This word, oh my god, I'm struggling with it. So it's inevitable, but what I think that person in that podcast meant was that fiat is broken, gold just doesn't work, and due to us being conscious and being able to develop technology, sooner or later, Bitcoin or something similar was going to happen. And also there is this amazing article on how you have decentralization in nature, and they're giving the fungi as an example. And my point is that even decentralization is not something that It's not something that we've invented. It was already there.
Absolutely, completely agree. And that's part of my analysis, is finding the natural patterns within Bitcoin's price action, within Bitcoin's growth. And if you look at, there's some laws governing the growth of technology. And if Bitcoin is essentially a telecommunications network for France, it's going to grow like a telecommunications network. And we've seen the network effect with what happens with Facebook, for example. Very few people are not on Facebook because that's where everybody is. Bitcoin is an inevitability in that same way, that more and more people are moving towards it, and that network effect is growing, and it's going to pull in more and more participants, both on an individual as well as an institutional level.
Okay. So what do you think about the grassroots of Bitcoin, it being bottoms up, meaning literally late 2008, 2009, the first people who were able to interact with Bitcoin. At that time, it's not even investing or speculating, it's just interacting with the protocol, the software and so on, were just these people on a mailing list. And then eventually it was some super duper geeks. And then eventually it grew out. And then 2013, it kind of starts getting into proper retail, into proper mainstream. 2017, then definitely that was a proper retail bull run. And now 2017 being definitely discussed as a new asset class for the first time. As 2017, that was not the case. Jamie Dimon from JP Morgan was saying, I'm gonna fire anyone who touches it. If you touch it, if you buy it, you're gonna pay the price for it, and so on. And now 2021, we actually see, just from last week, this week was the news that JP Morgan allows their financial advertisers or whatever it is to not propose to their clients to purchase Bitcoin, but if they ask for it, to do deliver investment options. And I see that you're sharing the screen, right? Is this what's happening?
Yeah.
Okay.
Yeah, and that's basically what we're talking about, right? Is the innovators, the early adopters, the early majority. I think that we haven't even gotten close to early majority yet. We're still in the early adopters phase of Bitcoin.
Oh, absolutely. No, absolutely. Yes. And with El Salvador being the first state to start recognizing Bitcoin as a proper solution to a problem. So what's your take on on Bitcoin as a bottoms-up development?
Well, it's unique because you don't have to have any permission to participate. You can set up a node, you can download a wallet, you can transmit value without anybody's permission. El Salvador didn't need to deem it legal currency in order for it to be used in El Salvador. In fact, it has been used in El Salvador for many years among some populations, some communities. And that's really exciting because there's a huge percentage of the population globally that has access to a mobile phone, but not a traditional bank. And that idea of banking the unbanked and bringing more safer, faster, more effective commerce to all corners of the globe is really exciting to me. It's going to bring a lot of people out of poverty because it's going to allow them to conduct commerce in a way that they weren't able to do before.
Absolutely.
Earlier you said about the exponential growth and people adopting it and everything. Which one would you say, in your opinion, as an analyst, is more accurate? Is it the stock to flow or Metcalfe's law about exponential growth?
Well, I think that they are both accurate descriptors in a in a logical sense, in a narrative sense. The scarcity of Bitcoin is what gives it its value. No disrespect to Plan B. I admire his model and his bringing attention to that thesis that the scarcity is what drives the price of Bitcoin. I question whether 100 years from now, in say 2121, if the reduction in the rate of flow is going to be significant enough to spark another bull rally. So on the long enough timeline, I don't think that the model will hold out, but that's true of probably any model. For now, it has held true, and it seems very significant. The projections for this cycle seem very valid to me. Beyond this cycle, it's anybody's guess. I think that there are definitely, we're essentially into the third major bull run of Bitcoin, and there's many more that will be had. It will be interesting to see what models persist and which models don't. As far as valuing Bitcoin, I don't know that Metcalfe's law can be applied directly, saying that the number of participants equals a certain monetary value vis-a-vis the market capitalization, but that does increase the value of the network itself, and the price will reflect that. Will it be a one-to-one reflection or something like that? Probably not. But as the number of nodes increase, as the number of participants increase, as the amount of value transacted on the network increases, as the hash power of the entire network increases, that brings more value to the whole network without a doubt.
I mean, in my opinion, they're both a separate side of the equation. So the stock to flow is basically how scarce it is, and Metcalfe's law is basically the network effect, which basically is the value and the ask for the Bitcoin. I think they definitely meet in the middle. All models are flawed. I'm not saying they're not, but I think they're both really interesting, and they both show the same direction, I think, and that's where I'm heading with this.
Yeah, I mean, no matter how you look at Bitcoin, unless you already bring to it a defeatist perspective, there's almost no way of looking at it and saying, yeah, that's not going to last, at least not at this point. If we were talking back in 2011, 2010, of course, that was really up for question. 2013, 2017, is it a bubble? Yeah, it's a bubble. But does that mean it's never going to go higher? Well, clearly not.
Yeah.
I feel like Bitcoin is the same way that it's quite complex and it's multidisciplinary, and in order to get Bitcoin, you really have to be quite agile and be able to see it from a different angle. Firstly, from a technology standpoint, that the fact that it has solved the Byzantine's problem, general problem, also at the same time the digital scarcity problem. At the same time, you have to understand that again there is a even geopolitical war could happen over Bitcoin if, let's say, I don't know, US completely adopts it and China doesn't, and so on. Like, there is so many things at play for the future at Bitcoin that I feel like the same way the models, what Alesh said, both Metcalfe's law and stock to flow do apply, and possibly how many other models and not only models but network effects could get into play. Like Michael Saylor says, the moment that you get 1 billionaire who can get another 5 billionaires and convince them, you know what, Bitcoin is the future, put 1 to 5% of your money in, then even though we have a very small percentage of the people affecting the network highly, and at the same time though, even if you don't have these people, this is pretty much what we had until now, right? From 2008 until 2018, let's say, the retail have driven the price higher and higher and higher. Very few high net worth individuals have been invested. And maybe, just maybe, from 2021 onwards, it's going to be at the hands of the big boys.
Yeah, and if that's the case, I want to get as much of it as I can right now. Basically, my goal since late 2019 is, okay, this is clearly not going away. The billionaires are going to get this and they're going to want it, and I want to front run them. And so I've been trying to encourage all of my friends and family to get some of this because it's an inevitability, like we've been saying. One of my thesis for right now that I'm working on how to describe, I'd like to play with for you guys. Basically, in my view, the January through March upward volatility that we saw in Bitcoin's price, right, was essentially kind of getting ahead of schedule, where these big guys that you're talking about want the price to be. Now, they don't control the market entirely, but they can try to manipulate it, mostly through forcing liquidations if they can change the price just a bit at the edge. So when people are going bullish at resistance, they can throw it into reverse and liquidate those and drive the price down further. Then they can also play things with the narrative. So they have Elon Musk coming out and saying, oh, it's bad for the environment, even though it's not. They have China coming out saying that they're going to ban it, even though they've banned it every bull cycle in the previous terms too. And the way that they try to manipulate the price is essentially by affecting the psychology of the participants. But the point here is that we've already validated essentially from January through April-ish that massive growth with Bitcoin is possible and everybody's looking at it. So we haven't quite seen mania in my view, but what we saw was a test pump. We basically validated for a whole bunch of people that, hey, you can put your stimulus check into this and do a multiple off of it pretty quickly. And that's not necessarily the message that I want to be sharing with everybody because it is speculative, it is risky, but that is what people saw. And where we're at right now is that anybody with a PayPal account, anybody with a Cash App, anybody with Robinhood or Coinbase, which are really, really easy to onboard, they have bought into this narrative. Now, maybe they sold at a loss, maybe they sold at a profit, maybe they've held on. In any case, all of those participants are still registered on those accounts. They are already in the pipeline, and the pipelines are being built much bigger than that. Visa has done, what, $1 billion in transactions on their crypto-connected cards. All of the big banks, like you had mentioned, JP Morgan, are realizing that this is something that their customers want. And so the pipelines have been laid, and now when the real mania kicks in, everybody who was already on is going to be at the push of a button back in the game, and their brother and their sister and their mom and their auntie and everybody else around them are going to see it happen, and they're going to bandwagon. And that's when real mania hits. And so I can show you on the charts where I think that we have basically had a test pump, and we haven't really gotten into the true mania and what that would look like.
Okay.
Yeah.
You want me to pull that up right now?
Please do.
All right, cool. Let me share that out.
I just want to say, because said that the banks realized that their clients want it. It's more like the banks realized that they can make money off of this. First, it was, I forgot which one was it, Wells Fargo or whatever. One of the banks put the Bitcoin service on, and unless their competitors, the other large investment banks, don't offer that service, everyone who wants crypto would have went to this exact bank. So this is why the competitors were forced to also offer Bitcoin futures or custody services or whatever.
The market will naturally gravitate towards its best yield. And if you're not going to offer that, they'll find it, especially in the internet connected age that we're in today.
Yep.
So this is my overall model, my overall view, and I'm incorporating a few things. The primary thing that I have been looking at in the short term is the golden ratio, which is a 1.618 level. So here's what it looked like in the previous bull run. We breached. So first of all, let me introduce this lower green line. This lower green line. Can you see my mouse?
Yes, yes, we see. Yeah.
Okay. So the lower green line is a 2-year moving average, 730 days, and we only break down into that level during absolute despair when everybody thinks that it's over. Conversely, a 5x multiple, 5 times that value, is this red line up at the top. And we only break into that area when we are absolute mania, insane greed levels, when things are doing multiples every day. And it's not sustainable to continue on that, which is why we go into a blow-off phase. And so I've incorporated the psychological phases of a mania, of a bubble, if you will. You have to spit at the bottom, then it begins recovering. And what we're looking for recovery is this 1.0 level. This was the previous cycle high, 100% recovery. And if we consider this this point at the very bottom of the cycle here to be 0, then the relationship between 0 to 1, you can find the 0.618 level. This is phi, a golden ratio, and that serves as resistance before we break off into the takeoff level. And so trying to recover to that is essentially the stealth phase. We're coming back up towards the previous all-time high, but not breaking above. We find resistance at the previous all-time high, and then we have finally recovery. And at that time, awareness begins. That's when people start looking at the market again. They start saying, oh, I thought Bitcoin was only going to go down, but it's higher than it was even at its peak years ago. So they start paying attention again, and then that drives a lot of excitement. And eventually, at some point, we hit this 5x multiple of the 2-year average, and we get a sell-off. In this case, in 2017, we saw a few times resistance at this level. And what you would call this hump right here, where it looks like it's going to go down and never come back up, but instead does the opposite, it goes up and never comes back down, that's called a bear trap. And when you believe that it's going to go down, then you short it. And shorting at a support level actually will drive the price higher. And so eventually we find another resistance. Media attention is really starting to kick in at this point. Mania phase is in full bore. We're getting news about people selling their homes or taking mortgages out to buy Bitcoin, and the greed is in full swing. And eventually it's too much and we get back into the blow off phase. And that's what we've seen previous cycles. You can look at 2013. We also had a similar kind of cycle. Now we have, during this current cycle, we have, again, the despair. This was a black swan event. Nobody was expecting that. And if you kind of ignore this downside, the price still stayed above the 2-year average. So I think that this is a pretty solid way of looking at the price. And again, just like before, we saw resistance at the 0.618, that golden ratio 618 level. Resistance again, breaking through into awareness. We get takeoff, breaking through the previous all-time high, 1.0 recovery. We get a real mania. And when I saw this test right here, I thought that that was our golden ratio 1.618 retest, and we would continue on. And I wasn't really looking at the 5x multiple at this time. And so I did not try to trade this. I just continued stacking all the way up, and I'm continuing to stack all the way here because to me it's clear that greed hasn't hit yet. Mania is absolutely coming. I expect that media attention will really return, not just when we break the previous high at 64, 65,000, but we're going to really get media attention when we get about to that 100K level. Psychologically, that's very a big number, and that means also, I think about a $2 trillion market cap, if I recall correctly. And so we're likely to have a big sell-off there. That'll be a correction. And that's probably when people are going to say, see, I told you, Bitcoin's not going to break 100K. It's going back to zero. And that's when they'll short at support right here, and we'll blow straight through it on beyond 100,000. That's how I look at the cycles. I think that it's interesting also that we had a much bigger bear trap, a much bigger rounded top than we did in the previous cycle, rather than a hop, skip, and a jump. We have a big jump and what is looking to be a big fake out. The 1618 level has held in every cycle before. It could fail this time. Maybe my thesis is wrong, but every single day that we hold above it, and we've held above it since January, I think that this leads me to believe that this is a solid model, at least for this cycle.
Absolutely, and I was gonna say it's quite specific because you're saying, you know, going close to 100K, going back, going down to 60K. People are like saying, oh, it's going down to 30K, and actually 60, 65, 70K, whatever it is, holds up. It absolutely makes sense.
Yeah, and psychologically it makes sense. The 100K level also coincides with about 2.618, so that's an additional one on top of this 1.618 level. And I think that that is, or excuse me, it was, sorry, the 64K level was the 2.1618.
I just have to say though, 10K was also a quite nice rounded number, but we ate through it in 2017 like nothing, if I remember correctly.
Let's see.
Can you open TradingView, like proper TradingView, not a screenshot, so we can see?
Let me pull that up. Okay, I'm going to share a different window. So this is looking at the BLX chart. It's an index chart, which means that the current price is not going to be necessarily exactly as it is right now. There's a delay on it. It's taking an average of many different exchanges to develop its price. But let's go out to the weekly. And we're looking at the
we don't see anything.
level.
It's not updating. Is it for you?
Oh, I'm sorry.
No.
I'm sharing the wrong screen. How's this one? Cool.
Yes, now I see it,
Yeah.
So the $1,000 level is basically the 618. We did see resistance at that level during the most previous cycle. During the first cycle, yeah, we basically, I mean, I would call a top at 1200 when we came from 100. I would call that topping out at 1,000, relatively speaking.
Okay.
It didn't stop exactly at 1,000, but if you look at the weekly close was what, 950? I mean, that's basically topping out at 1,000 right there.
Okay.
Yeah, it was basically just a week.
Yeah.
Yeah.
Okay. And what about 10K?
10K. So we moved a multiple beyond 10K, but it was definitely closer to 100 than it was. Excuse me, it was closer to 10K than it was 100. And our weekly candle topped out at what high of 19? No, not high. Close of 19,000.
Yeah. No, just my point was that 10K is also a very round number, but actually we went through it, no problems whatsoever.
Oh yeah, that's a good point. I mean, 100K is not likely to be the top. If you look at that consideration that 100K was resistance and then we went, 10K was resistance, then we went to 20, it's reasonable that we could see resistance at 100K and then go to 200.
Okay. All right. I have a few questions.
Sure.
So, firstly, we have very similar views on how the bull market should play out. However, there are a few factors that I would like to highlight and hear your thoughts on it. So, firstly, the distance between the halving and the top. They can go back to 2013 and measure the orange lines are the halvings, right? I'm not mistaken. Okay. Can you measure, please, these weekly candles? That's fine. So let's see how many candles are there between the it's the tape, right? Bottom. Okay. Or top.
Sorry, you're looking for what time range?
No, I'm saying let's just measure from the halving until the top. How many weeks is it?
So in 2012,
52 weeks.
That was 52 weeks, almost a year exactly.
Okay, let's check the others.
And let's get the actual dates. You said from the halving to the top, right?
Yep.
And this one is 532 days, 76 weeks.
Okay. So my point is that possibly the time which takes for the bull market to unravel would increase. And just let me throw something else at the table before we discuss that. The halving itself, dropping the mint, how much you are mining per block from 50 to 25 is really a lot, because at 50 when we halved it to 25 it was at 10 million coins, and then from 25 to 6.5 it was at roughly at 15 million coins, and then the last halving was at if I'm not mistaken 17 and something million coins. So my point is that the halving has less and less effect. Firstly, because the difference between 50 and 25 coins is a lot bigger than, let's say, 6 and 3 coins. And at the same time, not only that, but also, let's say, the 3 new coins compared to the already mined over 18 million coins is going to be really less significant than how during the halving when you had 50 to 25, when you had only 10 million coins, meaning we're still mining a lot of the quantity that will ever be mined. So therefore, I think that the halvings will start to stretch out, the bear markets are going to become smaller, up to a point where we're going to almost like completely derail from the halving dates.
Yeah, I don't doubt that. I mean, for now, it's still relevant, but on a long enough time frame, I think that definitely makes a lot of sense. You were talking about the time from the halving to the top. Have you looked at the time from the bottom to the halving?
I have not actually.
There's a really interesting thing that occurs. I did not discover this. This has been on TradingView for a couple years now.
Okay.
I want to use a Fibonacci time for this because I'm just going to split the time from bottom to top in half, and I want you to see what happens. So from the bottom to I'll just do it to the halving.
Okay.
Actually, let me adjust my tool here so I can properly illustrate this. Where was I? I always lose my tools. Oh, this one. So let's adjust this. I'm going to do, that'll be 0.5, and we'll call this 1 so that I can draw it the way that I'm trying to explain it. So if we go from bottom, top, what you find is that halfway there is where the halving is.
Okay. Very
so
close.
Time from bottom to halving is almost the exact amount of time from halving to top. And this occurred during this cycle. It also occurred during the, from the 2015 bottom up to the top, halving almost exactly.
Yeah, I see.
And so if we project the same thing from our most recent bottom in 2018, grab that and then go out. So if we project it and put the halving midway, then that would project a peak sometime around September. Now that seems pretty damn quick considering the fact that we're still quite low, and we anticipate that it's going to go much higher. So maybe this doesn't hold true, but I think it's interesting to consider. Another time-based phenomena that I find really interesting is these green bands right here.
Mm-hmm.
Each of these represent the months of, oh, actually, this is a different chart. I have another one where I show, pull it up on Twitter, the summer months during a bull run. What does that look like? And from April to September during a bull run, that's when we have this correction. In this case, it was a hop, skip, and a jump. In this case, it was a huge run up and then a correction. Right now we have a kind of hump, and we're going to essentially, or I anticipate, we're going to go higher here. So an April through September correction in a bull run on a time scale makes sense to me. Psychologically, it's when people are barbecuing, not buying Bitcoin. It's when people are out at the pool or out at the beach. So that makes sense too. There's less people watching the news. There's less people on social media.
No, and people want to spend. Like, I mean, if it's the summer, like I want to go to Greece, I want to go to Italy.
Totally.
You know, I don't want to invest in Bitcoin. And something else though. Wait a second. Let's go back to the distance between the bottom and the top. So listen, here is the bottom, here is the top, and in the middle is the halving. And the thing is, it's very important also what is the distance between the previous top and the bottom we speak of. Could you measure that? Could you measure that? Because my point is that if... Yeah, so that was
like
60. Yeah.
So you're suggesting that the time periods are increasing, I'm guessing?
Yes, and this is why it doesn't hold true anymore. Just because what happens is what we discussed about the bull run stretching out. If it stretches out, the top of the bull run gets closer and closer to the next halving, right? And then therefore, sorry?
In this case, the first cycle, the downside to the bottom was 23 weeks.
Yeah.
Second one, it was 59 weeks. And most recently it was 52 weeks.
Okay.
So it's not a decline in the from the top to the bottom. I don't see a clear, consistent pattern here. It will be interesting to see if we find anything. Maybe it's kind of an average or something like that. It makes sense to me that the amount of time to find a bottom may not be consistent, but then going from the bottom to passing the halving, that having a how should I say this? Basically, the longer the consolidation, the longer the pump. And so if we have, and that to me makes sense, being equidistant, the lead up and the conclusion.
Okay. Because my point was that we measured the distance between the halving and the top, and if this increases the halving to the top, therefore the top is getting closer and closer to the next halving, therefore the bear market has less time to unravel.
Potentially, yeah.
Otherwise, you're going to push the bottom past the next halving.
Yeah, and that could happen in future cycles.
Yeah.
As more and more participants have faith in it, and they're not trying to play short trades, then the bottom is going to be less drastic in the future. I still think that, especially with what we had talked about, or how I brought up that the pipelines have all been built now. It's easy to get on board, and if you're on board, you're only a button away from getting in, right? But unfortunately, that also works on the reverse. which means that this cycle, I expect that we will still have a big collapse, even if in future the price may stabilize and have less negative volatility.
Okay, interesting that, so you still do foresee a proper bear market with a,
at least a blow off top.
Yeah.
Whether or not the bull market lasts as long as before, who knows? And maybe the blow off top will bring us not as far down as previously, 85, 90%. But I still think that we're going to have a massive run up and an overbought condition and a collapse after that.
Okay.
Significance, hard to say.
Okay, a few things. Okay, a few things then. Two things. So one is that I think it was Raoul Pau saying that volatility, maybe it was actually many people saying it, volatility is the price that you pay for high return. Because if it was a straight 45-degree line going up, to the right and to the top of the chart, everyone realizing that are just gonna try to front run everyone else, and this is why the volatility happens. At the same time, though, you're saying that you still expect to have a blow-off top, meaning we're gonna be overbought, we're gonna have a massive correction, but you're saying that you don't expect the correction this time to be 80-85%. Let's say 85%, as it was 20 to 3K and so on. And this is actually a topic that is very interesting to me. How to play the market with the idea to increase your Bitcoin position if possible. And I'm not talking about futures trading, I'm talking about spot. And I'm not talking about selling, in 2017 we had 6 correction of 30%. I'm not talking about that. I'm talking about buying as close to the bottom of the bear market and selling as close to the top of the bull market, which means you do one buy and one sell every 4 years. But if you do it right, actually you're gonna multiply your Bitcoins a lot. And the thing is though, that if during the bear market after 2013, where we topped at let's say 1200, if the bottom is, it's around 200, right? Like 150, 200. Let's say 200. If you didn't buy the absolute bottom at 200, but let's say you bought at 300 to 400 range, that's your average buy, okay? With our cost average or whatever. Yeah. So let's say 300 was your buy. The thing is, in my opinion, if you sold at 10K, which is just 50% from the top, you've done very well. Like, it's quite hard to sell at 20K. Like, there is almost no people who bought exactly at 200 and sold at 20K. Like, that's unreasonable in my opinion. So if you bought at 300 and you sold at 10K, that's already a 30x return, which, I mean, to some degenerate apps, that's like, oh, that's every Tuesday. Like, that's nothing. But to me, 30x on my savings in 4 years, what the that's insanity. Okay, so at the same time though, what I'm really afraid of is that if I try to time the market, let's say that we're 2017 now, and if I sell at 10K, the issue is I might not get a lower price. Now with the hindsight, we know we dropped to 6K for quite a while, then to 3K for 3 months. I could have re-entered lower. But I could have sold at 5K. I could have sold at 6K, and then FOMO back in at 10K.
You don't know if you're here. You don't know if you're here, or if you're here, or if you're here, or if you're here.
Yes. So what's your take on that? How do you think to play this market? Because some people are saying we're gonna top at 300K. Some people are saying that maybe people are gonna front run sell and we're gonna top at 240. Some people are saying we're going much higher than you anticipate, maybe 500, 600.
Well, I'm fairly risk averse. Obviously, we're in a very volatile asset, so that's a pretty relative statement to say. I don't do leverage trading. I've tried my hand at it, and I am too impatient, and I make moves too early, and that's kind of what you're talking about there. So the long term is definitely where I keep my focus. And yes, ideally, you want to accumulate, but to me, maybe just because I don't have that much dry powder, I'm not going to have one buy right here. I'm going to look for signs that the market has bottomed and begin averaging in, buying every week, buying every week, buying every week, buying every week, buying every week.
Yes,
okay, now we're above previous all-time highs.
And
then once we get above that all-time high, that's when I'm looking for opportunities to average out. So rather than one big buy in, one big buy out, I stack in and stack out is my strategy.
Absolutely. No. When I said with two, only with two, one buy, one sell, I meant like, theoretically, if you play it out perfect, you make 100x, amazing. Okay. this is why I set average price as a 300. Let's say your door cost averaging at 200, your door cost averaging at 300, at 400, and your average price is 300 or whatever. And after 400, you stop buying just because you've been already buying for, let's say, a year. And now, even if you put extra money at 800, 1000, and so on, like, it just has diminishing returns on your portfolio. So absolutely, stacking in your orders to buy and stacking in your orders to sell works out. However, though, what I'm trying to highlight here is my fear that, let's say, if we're right, and 30K, this is a bottom. This is not like we're on the way down to 3K, 10K, and as some bears say. But let's say we bounce out. Let's say we bounce out, and let's say exactly as we are talking, this is what happens. We go close to 100K, we drop back to like 67, 8, 70K, and then we go to 300K, for instance. My fear is that if I start selling, let's say 150, we go to 600. And my personal idea is that whatever I cash out of Bitcoin, I'm not cashing out with the purpose of repurchasing lower. If I'm cashing out Bitcoin, I'm doing so with the sole purpose of diversification. Too much of my portfolio, which at the moment is 99%, is in crypto, and therefore I just want to, like, space it out in other assets just to lower my exposure, lower the risk, because you don't want to be dependent 100% just on one asset class, which again, I am, but I know, I know what I'm doing, meaning I'm 100% purposely doing that at the moment. Okay, so my point is the following. If I start selling, I sell not with the idea to purchase, right? However, purchase back at lower price. However, I do want to have like some targets that, let's say, if we hit, I don't know, 300K, I want to sell 50% of my portfolio or something, or 80% of my portfolio at some price that I'm quite confident that if we hit there, that's an overshoot, that's definitely the top, and so on. So how do you, what's your plan to proceed for the coming 6 months, 8 months, 12 months, whatever the bull market continues?
Yeah, let me pull up the, I think that the pie indicator has been really accurate, and it called the top here as well. In previous cycles, we saw a double top, and that could play out again. So the pie indicator could be a really good top signal. The area that I'm looking for is that 5x 2-year multiple that I had mentioned before. So let me add that here. Usually use, but this will do. Yeah, there we go. So I'm looking at these areas where we're above the
red line.
This 5x of the 2-year multiple. And you can keep an eye on RSI. RSI obviously is going to be showing overbought this whole way up once we really start going. I think that a lot of people assume that if RSI is in overbought territory, that means that the momentum is done, but it can persist. And so I'm looking for this level where it's 5 times above the 2-year average is pretty consistently overvalued.
And I think, I mean, if you just apply this and you just say, okay, when it goes into red, I start selling, not everything at once, but like I start now, and then it goes higher still, like you sell 5%, 5%, 5%. And even if you just do this with your 2-year average, moving average, and 5x, you could easily double your Bitcoin while also cashing out some.
Definitely.
And that's like the dream, right? Doubling your Bitcoin in every 4 years, and the Bitcoin goes 200% per year or on average. Like, that's the dream.
That is the dream, exactly. And some of us may be successful at it. Some of us may time it poorly. That's what makes it challenging. That's what makes it worthwhile. If it was easy, it wouldn't be worth it. If it was easy, it wouldn't be so significant of a return.
Definitely. And I heard about people like in the previous bull run, they sold at 2K, 2.5K, Bitcoin never returned. So even if you sold at 3K, the closest you would still buy it slightly more expensive. And I think then you have a grudge against it. Like, I'm not buying it if it's not at lower than I sold it.
Yeah.
That can also be a big problem. That's why you always, I mean, my personal strategy is like, yeah, I'll try to like 5%, but I will always leave like.
Always hold a core position, especially. And if you think about it from a finance standpoint, an accounting standpoint, first in, first out versus highest in, first out. So that for anybody who's not familiar in accounting, you may take your books, and when you bring in revenue or bring in an asset at a certain price and then you sell it later at a different price, are you going to say that you are selling the most expensive one that you bought, or are you selling the cheapest one that you bought? So in my mind, to maintain the most growth, I only want to be trading or selling the ones that I bought earlier. But in order to maintain my stack, I want to keep all of those. So in my mind, I'm only selling the high purchased Bitcoin. So if I buy Bitcoin here at 30K, I'm selling that Bitcoin. I'm not selling the Bitcoin that I bought at 9K. Now, of course, it's in a wallet and it's all UTXOs, and it doesn't actually work that way. But psychologically, I want to maintain as much of the stack that I got before previous all-time high, or in this case, per my thesis, before the 1.618 level. I don't want to sell any of my Bitcoin that I bought below 30K, because we will probably never go there again.
Good point, yeah. And I mean, how would you say you want to like avoid, that's your personal opinion about the futures and leverage, but like just apart from the strategy we just discussed, your personal view, how can you maximize, like, okay, let's say we say it's 80% now that we're going above 100K. We think this was the local bottom. Now it's up only. How would you make the most out of it with the knowledge we have now?
I trade Litecoin. I trade Litecoin against Bitcoin.
Okay.
And Litecoin has been around for 10 years. It'll have its 10th anniversary this October. It has 100% uptime. It is essentially the same as Bitcoin. It just came later, and it has a larger supply cap. It transacts faster, and all of those are selling points, a narrative, a marketing tool for selling Litecoin. I don't necessarily believe that Litecoin will be the end-all be-all. I don't necessarily believe that Litecoin will be currency and Bitcoin will be gold, but that's the narrative, and it's easy to understand. There's a lot of benefits of Litecoin where people will buy it. First of all, it's almost as accessible as Bitcoin. It's on almost every single exchange, including PayPal, Cash App, or not Cash App, excuse me, Venmo, etc. There's more Litecoin ATMs than any other cryptocurrency other than Bitcoin. It's been on the list for so long. When people flip through and they see Shiba Coin and Dogecoin and Ethereum, all these things are hard for them to understand, hard for them to believe in. If they believe that they want Bitcoin, but it's too expensive, because that's what a lot of people think. They look at 30,000, 60,000 and say, that's too expensive, I can't buy it. Now, the three of us here on this call, we understand that it doesn't matter what the price is. You get a fraction of it, and whatever multiple the whole price does, your fraction will do a multiple of that. But that's not the point. The point is that unit bias, the desire to have multiples of something rather than having a fraction of something, will push people to want to buy something cheaper. And so when they're looking at those 4 or 5 options that are on their app on their mobile phone, Litecoin is the cheapest one, and it makes sense to them compared to Bitcoin. And so when I look at the chart of Bitcoin compared to Litecoin, I see that it's in an undervalued state right now. And so while I stacked Bitcoin all of 2020, I have been stacking Litecoin all of 2021. And when it increases its multiple, I'm going to trade it back into Bitcoin. So let me show you that chart real quick.
So you believe that altcoin will outperform Bitcoin in, let's say, next 6 months?
At some period, yes. I do believe that. Over the whole time period, maybe not. That's not really, I think that timing it is challenging, but if you follow the comparatives charts, you can actually see what it's likely to do. So let me share out this window. I'll actually just drag it into my existing one. So this is a chart of the...
You haven't dragged it.
I'm sorry. Wrong one. There you go.
Prop trader with multiple screens.
Yeah. A gamer, trader, researcher, more screens, more better. So Litecoin tends to decay against Bitcoin before it absolutely rockets against Bitcoin.
Okay.
Then it decays and it rockets, decays and it rockets. And these wedges are extremely bullish. Now I'm doing a comparison of Litecoin dollar to Bitcoin dollar just to get the longest time frame here. You'll see that the direct comparatives, because you can trade Litecoin to Bitcoin directly against each other, may look just a little bit different. I'm also on log, which is not really make a lot of sense. Oops. So right now, we are at the bottom of this range. And this is a really sweet area to buy Litecoin in my view. Or even, and first of all, I also want to say, we've been talking about what we're doing. Each of us are just talking about our own strategies. This is what I'm doing. I'm not giving financial advice to anybody. I'm not a financial analyst. I wouldn't want anybody to make any trades based off of what I say. I'm just explaining how I look at it, right? But point being, this is an area that Litecoin doesn't tend to stay a lot of time in. And when it gets above, it's doing multiples. And if we want to multiply our Bitcoin, if we buy Litecoin with our Bitcoin at 0.004 of a Bitcoin, and it goes back up to 0.02, we will have 5x'd our Bitcoin stack.
Yeah.
There's also a descending trend line here that over time, it's becoming less and less, and we may see a breakout that will get above previous levels. So to me, this is a lower risk than trading options or trading with leverage, because Litecoin will continue just like Bitcoin will continue, and it will follow the price. Worst case scenario, in my view, is that Litecoin underperforms Bitcoin over the short to midterm, and I don't get the multiple out of it that I was hoping, but with the significant possibility that I do get a multiple out of it. I like that risk return reward kind of possibility.
Okay.
And even if the multiple comes at a later point, eventually we believe it will be there, right?
Yeah, I thought that this was, when we were really kicking off this pump right here, we went from 0.038 up to 0.08. So we doubled in a few weeks right there. Again, on the Bitcoin comparison, not on the dollar comparison. So if Bitcoin's going up, this is doing even more. So that's why I think that it's so volatile, is that there's a lot of traders that like to play this game.
Okay. I just want to mention two things. So I feel like my first initial thought that came was like, oh, this that Bitcoin is digital gold, Litecoin is digital silver. Investors are not that stupid anymore. They're not going to buy into that narrative. They understand that there is only place for one store of value and Bitcoin is dominating it. And then I realized that people are buying Shiba Inu and so on. So definitely investors are not getting smarter.
The thing is that you have to think like the masses, the lowest common denominator.
I get my point is something else. Wait. So this was my initial thought. And then me realizing that brought me onto the topic. Okay, so do you notice that the pump, the last one from, like, can you go back to the chart just for a second? Oh, yeah. So the last pump that is in June, right? No, like go to the right.
The small one, right?
Yeah, the small one. Yeah, this pump, if there was no Shiba Inu, Baby Doge, SafeMoon,
right,
Rocket, and so on, if these ERC20 trash did not exist, Litecoin was gonna go to 0.02 as it did back in 2019. But it didn't. Why? Right. Because the money did not go into Litecoin, they went to this trash. And what I think, sadly, is that Litecoin with time is going to decay and die out. And I was going to, then my thought was that it's gonna follow Dogecoin, but then Dogecoin now had the biggest pump in its own existence. It went to 500 Satoshis, which it never did before. And do you notice that? Wait a second, I really have this this wedge here. So my point is that the pumps are getting smaller and smaller, and Doge, always you buy it at 15, 16, 17, 18, up to 20 sats. You buy it because you know it's going to go up, right? And with Litecoin, literally 10 days ago, I bought Litecoin for the same reason you did. Like, I checked the chart and I thought it's just 50% from the bottom. And I was like, even if it dips lower, it's gonna dip with maximum 50% more. Sooner or later, Litecoin is gonna pump. I'm gonna multiply my Satoshis. So I've done it. I've done what you said. I've done it. But my point is that I think that Litecoin has a little bit more life left in it. So.
Yeah, I think so. And this is actually the chart that got me into Litecoin. I didn't start looking at Litecoin until January, when I caught Dogecoin breaking 66 sats. When I saw it breaking out of this long-term trend, I said, holy shit, this thing can really rock it, especially since Twitter is taking on it. And a lot of people don't realize that there's a tight relationship between Dogecoin and Litecoin. Dogecoin would not exist if it were not for for Litecoin. Litecoin miners are the network that supports Dogecoin. Dogecoin doesn't have its own network. It fell apart so much that they had to ask Litecoin to modify their code to allow merge mining. And so now anyone who mines Litecoin will be able to get Dogecoin for free. No additional mining, no additional CPU, no additional electricity. And so it's kind of interesting, of course, that they both play the same kind of oscillator patterns against Bitcoin, but there's also that close relationship, and the Doge faithful don't realize how dependent they are on Litecoin miners.
I didn't know that. Could you please repeat, why are Dogecoin dependent on Litecoin miners? What do they have to do?
During previous cycles, you know, when the miners abandon a network, the security goes to the floor, right?
Because you don't have hash rate and you can do 51% attack.
Precisely.
Okay.
And so in order to survive, the dev community essentially asked Litecoin to adopt it. And they enabled so that any script-based cryptocurrency could mine that cryptocurrency and get Dogecoin as a reward. It's called merge mining. And so Litecoin and Dogecoin are both script-based as opposed to Bitcoin's hashing.
Okay.
SHA-256, I think it is.
Yes. Okay.
So it's just kind of interesting where people who will be very obsessive about Doge and overlook Litecoin and overlook their own dependence on the Litecoin network.
Because people don't buy Doge for the fundamentals, they buy it for the memes.
Of course. It's got a cute dog on it.
Yeah.
And all those stupid forks afterwards. And now talking about altcoins versus Bitcoin,
sure.
We obviously have to talk about Ethereum, right?
Yeah.
What's your opinion on that?
I think that it's the strongest contender for an altcoin, and that's why people love it. It's a huge network. The narrative of trying to explain Ethereum to somebody, a new investor, is much tougher. And there are more competitors now. So I'm kind of cautious about Ethereum. It's still one of my biggest bags, so to speak. But I think that there is a possibility that Cardano, Polkadot, some other alternative could take up some of the market space that Ethereum has. But right now, it's definitely got the network effect. And I really like what Raul Pal says about it. It's possible that it could go to 20K or something like that due to its network effect. Remains to be seen. I still hold a significant portion of Ethereum, and I was accumulating below $200.
Yeah, I mean, the bull run for Ethereum from last year was amazing. I mean, I think the lowest I bought it was like $90. Like, I had stacked orders down. Unfortunately, not enough, but yeah, I mean, just, it's insane. I mean, people are always saying like Cardano can overtake it, DOT can overtake it. I mean, potentially yes, but at the moment, they're so far behind. I don't see it at the moment. Definitely we have, when it comes, if it comes, I think we'll be able to see it coming. But at the moment, I mean, in my opinion, especially now with staking Ethereum, like I was looking how much Ethereum is being staked every day and how much is being mined, and twice as much is being staked every day. And in 10 days, or how much the fork will come, and that will even reduce the emissions of Ethereum, right? So, I mean, everything points that Ethereum will. I mean, the price should get a squeeze, right? The exchanges will run out of Ethereum. People won't be able to buy it, and once we go from proof of work to proof of stake, you don't want to sell if you have proof of work, right? You want to sell if you have. I mean, of the vice versa. You want to sell when you have proof of work because you need to pay electricity and you're just selling it. Having thousands of Ethereums in your wallet doesn't yield you anything, but having thousands of Ethereums with proof of work, I mean proof of stake,
will yield you more.
So you want to accumulate as much more as possible, and it just completely changes the ball game.
Actually, these circles that you drew are quite interesting. I didn't look at it like that at all.
I mean, this is basically where we are. Whether or not it goes as high as it did, this is essentially that, like I said, that mid-summer correction. Another interesting thing. Do you guys look at Bitcoin dominance?
Yeah.
I don't know if I have any illustrations on this. No, but Bitcoin dominance is really, really interesting because it'll tell you whether or not you should be investing in Bitcoin or whether you should be investing in altcoins, especially for the long term. And right now, it looks like we're kind of at the lower end of it, and it wants to return back to where it was. But that's a little bit misleading because we both know that Bitcoin will never be 99% of the market ever again, right? Will it ever be 75% of the market again? Maybe during the next bear market, but I don't think that we're entering into the next bear market right now. So in this chart, we may be at a stage like this, or something like this, right? So we've had a really steep decline in Bitcoin dominance, but it's still going to go further. So
is it
and how many more projects are coming on board?
Exactly. Okay. So I remember, oh my gosh, what was the name of the American guy who went to Puerto Rico? Oh my God, there are so many.
Right about Goldbug Peter Schiff?
No.
He's big in Puerto Rico.
No, I know, but no. That guy, a crypto YouTuber, that literally shoots videos from his backyard. Anyway, it doesn't matter. So he talked about Bitcoin dominance, and I said the Bitcoin dominance is like one of the most stupidest and useless charts. And here is what I mean. Because you're adding more and more altcoins every single year. And I mean, the dominance is just going to go over and over forever because you're just adding more stuff on the table. So of course it's going to go over, right? Like,
well,
it cannot...
that's assuming that people want to hold on to shit. During certain periods, people buy into shit because it's going up. But then when they realize that it's done, they get out of shit really quick.
Sure. But no, I'm not talking about shit. I'm talking about serious, meaningful projects like let's say Cardano, Polkadot, Ethereum, projects with real developers, with real tools, with real usefulness in the world. And let's say Link, right? It's an oracle. It's like the connection between the real life and the blockchain, because the blockchain doesn't know who is the president of the United States today, but an oracle can tell it so. So my point is that therefore, let's say Link, just as an example, it's a meaningful project, we need it, and it's being added to this Bitcoin dominance, right? And let's say it's not correct, but let's say it removed 1 additional percent. If Link did not exist, Bitcoin dominance would be 1% higher. So my point is that over time, the Bitcoin dominance is gonna go lower and lower. So I agree with you that from here on we could go lower. However, though, when Bitcoin goes straight up, when it rips up, and it should do so soon enough, Bitcoin dominance goes higher, it doesn't go lower. And at the same time, when Bitcoin drops heavily, just like it did on 19th of May, outs drop even heavier, and this is why again Bitcoin dominance goes higher.
Yeah, to some degree that's true, but there's so much craziness with altcoins. I mean, we saw Doge in the top 10 this year.
Yeah,
like to say that the biggest markets are the ones that have the most future potential is a little bit of a stretch of the imagination, at least at this point. What you're saying may become much more true in next cycle and the cycle after that. I think that right now we're still in a bit of Wild West.
Colin Talks Crypto, by the way, is the guy. Do you know him?
Colin Talks Crypto. No, I don't. I'll check him out.
Oh, he's cool. Yeah, he has quite good videos. Okay, so okay, well, I would suggest let's move on to a few questions from the audience and myself, okay?
Sure.
That I prepared beforehand. Okay, let's first the first note that I've written myself is about Michael Saylor. So just tell me, when I say Michael Saylor, what's the first thing that pops up in your head? Would we have had the bull run without him? Shouldn't we expect like a lot bigger bull run thanks to him? What's your thoughts?
I think that he is a fantastic evangelist for Bitcoin, especially towards institutions. I haven't really heard anybody else illustrate and communicate as well as he does why Bitcoin is an investable asset from a macro perspective, and not just on a speculator perspective, but that it's, you know, as we've said before, it's an inevitability, and that having 1 to 5% of a treasury in Bitcoin is kind of, to not do that is kind of a mistake. So I really, really admire him for that. As far as his impact on price, who knows if he had conversations with Elon Musk before Tesla bought it, that may have had an impact there, which would directly change the price. It seems to me that the biggest factor in Bitcoin's price this year has been Grayscale. And when Grayscale's premium was very high, there was an arbitrage opportunity that led to more buying of Bitcoin, more buying of Bitcoin to convert into GBTC to profit off of that and cycling through it. And then since we've had a negative a discount to NAV for GBTC, that arbitrage opportunity has disappeared, and that trade has changed. Lynn Alden highlighted this. She's that person is really brilliant in describing what's going on with the macro. That makes sense to me, and so I think that as far as the price goes, Grayscale probably had a bigger impact for this time period than Michael Saylor. Now, whether or not that will continue in the future will remain to be seen. Maybe he'll be a bigger impact. I think it's really novel also the way that he has leveraged his company assets and his brand recognition, his reputation to borrow money to buy more Bitcoin and do it at almost no risk to himself. It's really clever.
Okay. Could you stop sharing the screen, sorry?
Sure.
Okay, so okay, the cam. Okay, no, it doesn't. So the thing is, though, without Michael Saylor, exactly what you said, being evangelist about Bitcoin to institutions, I'm not confident that the same institutions that are going to enter, not have entered already, are going to enter from now until the end of the bull market, would have entered. And what I mean by that is that he started buying at 10K, right? Last year, 9K, 19.6, something like that. And before the big run up to 20K, right? Because we ate the price between 10K and 30K in like a month or something, like really quick. And then we stayed for a month at 20K and then 20 to 30K again in a month or something. And my point is that he did the Bitcoin for Corporations conference and he gave them the playbook, right? You register at Coinbase, you do this, you get custodian, you do that, you space your buys every 10 minutes, buy with 10K, 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 or whatever it is, I don't know. And I feel like it made it easier for them, right? He guided them by hand, right? So I really believe that, let's say, companies like Apple or Amazon or Oracle or Alphabet or something buy in, he would be a really large factor into that.
Yeah, I completely agree. Now, when you look at PayPal, Visa, MasterCard, I think less so, right? They saw the writing on the wall. They need Bitcoin. They need to be connected to Bitcoin. But as far as having it on your books as a technology retail company like Apple or a cloud company like Amazon, that may not have been so clear to them. And I think that you're absolutely right that Michael Saylor has been a huge factor in helping them understand that. And you mentioned Oracle. That was one of the early rumors that they were going to reveal that they had Bitcoin on their balance sheet. We haven't seen it yet.
Oh my God, by the way, I just realized I'm checking the next question and it's actually, I've watched your other podcast and actually you said that the Bitcoin is a necessity and it would have popped up even if it didn't exist.
Eventually.
About the inevitability of Bitcoin, you know, actually I picked it up from your podcast. This was my next note for to discuss with you, to elaborate on that, but we already went through this topic. Okay, but going back to Michael Saylor though, he says that all models are wrong. Why are they wrong? Because they have the data 2018 to 20 or whatever, to 21, doesn't matter. And they have this data on this system, but there's so many external factors. So it's not a core system, they're external factors. And these external factors, like let's say Warren Buffett, right? Like a constant joke about Warren Buffett, he's never gonna buy Bitcoin and so on and so on and so on. He's a dinosaur, yada, yada, yada. But if he endorses Bitcoin, it's game over. Like, we're gonna explode. If he says I bought, I don't know, like 300K Bitcoin.
And so what's the question?
Do you think that there is a quite high probability that stock to flow, golden ratio, everything else, we have a major reset and we have to start building our, you know, like our models 2021 onwards?
Could be. Maybe this is the last year that the models that we're looking at right now play out. We are in a kind of what's the allegory of the cat's out of the bag, right? You can't get it back into the bag. The genie's out of the bottle. There's no going back. And it very well may be different from here. I think when Michael Saylor says that all models are wrong, he's suggesting that they'll be broken to the upside. And I do like that idea, whether I subscribe to it or not. And I like what Max Kaiser says. Bitcoin has no top because fiat has no bottom. And so long as they will continue to devalue fiat currency, your British pound, your US dollar, your euro, etc., then Bitcoin will go higher. And there really isn't any limit to the value that it can go. We've seen that with hyperinflation of their currencies, the Weimar Republic, Zimbabwe, even Mexico had to drop off 3 digits off of their currency not too long ago because their currency was becoming so devalued. So if the central banks continue to devalue their currency, then the one true hard asset will continue to increase in value regardless of what the models say.
I agree. And I mean, everyone is talking how many new dollars are printed every year or every month, and that we have 30% new additional dollars printed just this year. But equally, euro is losing value against dollar, pound is losing value against dollar, which means that those currencies are being printed even more.
Yep.
So basically everything is devalued in fiat terms. Absolutely. And
if you look at the dollar index, then that kind of gets hidden. If you look at it, because you're just comparing it against other devaluing currencies. It's like, well, yeah, it's not that much of a change. And people it's like the frog in the pot. The boiling water is not boiling yet, it's just slowly boiling. And so we go from a 40-cent Big Mac to a $4 Big Mac. And we always knew that it was a $4 Big Mac. It's always been a $4 Big Mac. We've always been at war with West Asia.
Yeah. No, definitely. And looking at history before World War II, so the hyperinflation in Germany, I was reading some stories and people actually sold their houses like for 5x of what they could get in like 2 years before that. And they thought, okay, this is insane. I'm selling because this is so much money. I'll be rich forever and blah, blah, blah. And actually, because they sold their houses, they basically went bankrupt, even though they sold for 5x, because the houses next year were like 100 times more expensive and they couldn't afford even a room anymore. And I think I'm not saying the same scale will happen now. I think it's less, it will definitely be less, but I'm just trying, it's difficult to have a perspective with inflation because it can be completely wild.
Yep. And a lot of people also overlook the fact that Janet Yellen, the Treasury Secretary, has said she expects to see, quote, several more months of rapid price inflation. That's going to go to your Chipotle bowl. That's going to go to your Big Mac burger. That's going to go to Bitcoin. That's going to go to stocks. It's going to go to rent and everything else. Okay, that's several more months of rapid inflation. Then what happens after that? Well, they say that inflation is transitory and that it will return to lower levels. That still doesn't mean that prices will ever come back to where they are now. Inflation is a rate of increase. So that just means that we will increase slower. That doesn't mean that we're going to decrease prices and we're going to have a $4 burrito again. The prices are going to continue to increase. It's just a matter of the rate. And so just like now, I'm trying to accumulate as many long-term assets as I can, because spending my money on fashion or some consumable is just foolish at this point, in my view.
Completely agree. I think we're in a really weird, I think every generation has some sort of event where if you're clever enough, you can make a generational wealth. I think we're in this period now. I think when I remember when my parents were, in my country, in Yugoslavia, there was a period when we had hyperinflation, and if you bought a house on credit or on mortgage, 2 years later, that mortgage was worthless. You basically got a free house. And some people were clever enough to mortgage buy like 5 houses, and they got rich. And I think every generation has one event, and I think Bitcoin and this hyperinflation is definitely one of those events where you're clever enough and you play your cards right, you can make generational wealth.
Yeah, and some people may look at Bitcoin and cryptocurrency, digital assets, and say, I'm still not convinced. Well, you can still see the rest of the environment that's going on, all these things that we're talking about, And then you can invest in tech, because tech is basically doing the same thing that Bitcoin is doing. It's scalable, it's digital, it's growing rapidly, it's not decentralized, but it's global. And like, if I wasn't in Bitcoin and crypto, I'd probably be investing in tech stocks.
Yeah, second best.
And that could be another generational opportunity.
And the golden ratio. So we had a pump yesterday, today, so we bounced basically higher, but a few days ago we were basically at 29K, which is, from your charts, basically the golden ratio.
Yep.
In your opinion, what would break your model? Would it be like on a weekly chart, on a daily chart? What would need to happen, in your opinion, for that model to actually break?
Yeah, I'm looking at this on a weekly basis. A daily close below is not scaring me. Although we had one daily close below. We had a single daily close below in the 12-year history of Bitcoin, right? And that on its own is significant. Does it mean that the model is broken? In my view, no, because I'm looking at the long term. I'm looking at a weekly scale. If we had a weekly close below, is it broken? Some people will argue that, but I still think that even with a single weekly close, like the daily that we've had now, it could be a fake out and recovery. And so if that was the case, I wouldn't call the model broken. Others might. Just like it's kind of deviation outside of stock to flow to the negative side right now. That's kind of the same debate. How far down outside of the model is broken? Well, really, we can only determine that in the future. But if we broke down below 20K, yeah, of course, my model is broken. I don't think that that's going to happen. I think that that's a much even more stronger support level than the 1.618 is the 1.0 level, the all-time high. That's where everybody's going to want to scoop some up at 21K. The people who say that we're going to 14 or 12 or something like that, I'm sorry, dude, I've got a bridge to sell you in Brooklyn.
Exactly. And I think we never broke the golden ratio, let alone the previous all-time high.
Right.
I think every time once we broke the previous all-time high, even in the near future, we never broke down. Like, once we're over, that became the support, and that support was never broken.
Right.
So P-cycle top. You said that that's a good indicator. In my opinion, it's the worst indicator from all the popular ones, because it's 101 moving day average and exactly 167 or whatever it is, because it's literally cherry-picked numbers that just crossed over correctly at the previous times. And in my opinion, I don't know who made it, I don't know how, but in my opinion, he was just playing around with moving averages until he just got the numbers right in order for them to cross exactly the correct times.
But it still projected the 64 peak, and you know, so I'm with you on that. I'm with you on that. But there is also some interesting confluence that the ratio of those two moving averages is pi. And, you know, what I've demonstrated is that there are natural ratios that express themselves within Bitcoin.
Pi, you mean the number pi?
Uh-huh.
What does pi has to do with the P-cycle indicator?
So the pi cycle indicator is those two moving averages. Okay. The ratio of those two values is 3.14.
Oh, is it?
That's my understanding of it. I may have misunderstood it, but that's why it's called the pi cycle.
But Plamen, you love your moving averages, so why are you bashing the pi cycle?
Just because exactly for that one, I just feel like it's made up numbers just to match backwards, but we haven't tested front, I mean, you know, in the future, and now we tested it. I'm just so mad that it again called the top, because I was like, that's it, this is the first indicator that's gonna be broken, and then apparently, no, it correctly gets the top, right? And I was like, what the heck?
I've got a grudge against it for the same reason. I didn't think it was gonna hold true. But 350 divided by 111 is 3.15. So not exactly pi.
Yeah, but it's really close. Interesting. I didn't know that.
111 is also a significant number in numerology, as well as just in in mathematics itself. Repeating ones, it's related to the 9 repetition. The 350 is essentially a 1-year moving average. It's not exactly, but that's kind of what we're looking at there. So it's kind of a ratio of pi on a yearly cycle is how I look at it. Is it going to be perfect? Probably not, but it's interesting.
No, I'll put it this way. Next time, I'm gonna listen to it. Listen, absolutely, I was like, no way. This is the shittiest indicator anyway. It's gonna be broken. I looked into bitcoins.com. I looked at all the MVR or whatever they were called, all the indicators, and nothing was in red. I was like, that's it, no problems. And then it went like, I don't know. Next time, I'm gonna respect this indicator. Okay.
Right. Well, and then, you know, what's going to happen is that's when it's going to break, right? When we all finally believe it.
Possibly. Yeah.
That's how it works. That's how it always works.
Okay. So let's move on to the next question. So we discussed the 4-year cycles, and we discussed over the topic of how the bull runs are being latent, and how possibly they're going to stop being exactly 4 years cycles, and so being influenced so much by the halving. So the question is, so some people say, who'd be this crazy person who's gonna buy your Bitcoin at 100k or 300k during this bull market, or this bull market aside, if we are correct and Bitcoin continues to evolve and being recognized as an asset class and so on, and let's say next bull market goes to 1 million or 3 million or whatever. So what's your response to these people that say, I haven't bought Bitcoin at 1,000, neither at $100, neither at 10k. I'm not buying it now at 30k because I still think it's overvalued, and you're crazy to think someone's gonna buy it at 100 or 300k.
And their question was, who's going to buy it at 300k, right? And if they haven't bought right now, it's probably going to be them. Like I said before at the very beginning of this, you either get Bitcoin or you don't, and if you don't yet, there's always next cycle. The same argument would have been made at buying Bitcoin at $30. There's no way it's going to $100. There's no way it's going to $2,000. Right now we're at $30,000, and people are saying there's no way it'll go to 100,000 to 200,000. There are arguments to be made that, well, the market cap was smaller back then. Okay, yes, that's true, and it was easier to move the price, but there was also a lot less evidence that it was going to succeed. It was a much higher risk back then. Now the risk is much lower, and it's essentially proven itself to be, like I said before, essential. And if you still don't believe it, have fun buying it at 300k or have fun buying it at 500k, because if you're not buying it now, that's what the price is going to do later.
There is this saying, everyone buys Bitcoin at the price he deserves.
Yep, right. And you know, I called Bitcoin a Ponzi scheme, right? I believed that Bitcoin was a scam. You're just taking a digital token and waiting for somebody else to pay a higher price and then dumping it on them. And that's not sustainable. I didn't understand. I was wrong. That's what it looks like to a naive viewer, a third party. But because I didn't understand, I missed out. And so I didn't deserve to buy Bitcoin at that time. But then 2017 came around, and I wanted to buy in probably September, I think it was, because I was in school at the time. And I was debating, do I keep my savings and make sure that I've got to cover my rent and stuff like that? Or do I put it into Bitcoin? I understand it better now. I see that it is going to $1 million someday. It would be better if I could put it in now. But based on my risk tolerance at the time and the fact that I didn't have income as a student, I held off. I could have bought Bitcoin at much cheaper prices than I ended up buying it in 2019 and 2020. That was just due to my situation, and most people didn't. And I think that there's also a point to be made that a lot of people say, well, what you should have done was buy it in 2009, 2010. That's when you should have bought it. Well, it's like, okay, well, we don't have that chance anymore. So the best time to plant a tree was yesterday. The second best time to plant a tree is today. So we can't go back in time. We can't get those cheaper prices. It makes more sense to just accumulate now as you can. And like I said, I'm accumulating all the way up. I'm probably going to continue accumulating all the way down. I'm going to try to time the peak and sell some off at the top to maximize my gains there. But I'm thinking long term. I'm looking 5 years, 10 years, 20 years down the line.
And I think, like, looking backwards, like 2009, those people that bought it and didn't sell like most of their Bitcoin from like 2010 or those really early ages, they're either like insanely visionary or dead. I don't think there's anything between.
No, there's almost nobody who bought Bitcoin in 2009 who still holds it today, right? Yes. There's almost nobody, because you either sold it, you bought a pizza with it, or you lost your key, you didn't think about it, and so you lost access to the account, or you were on Mt. Gox and Mt. Gox got hacked, or you traded it into a rug pull, or all these different things. It has been incredibly hard to hold on to Bitcoin until recently. That's what's also really exciting about it. Now is the only time that I would recommend anybody put their money into it. I wouldn't have advised somebody to put their money into it before, because security of it, holding on to it, was so difficult back then. Now, you can say what you want about Coinbase or a third-party custodian, but that's what I would recommend to my auntie, for example.
Yeah.
I would like to...
Yeah, go ahead.
No, I was gonna say that I would like to go through your journey, like when did you first discover Bitcoin, but I just want to mention that if I'm left with the correct impression, I started buying in 2017, I started buying in 2017 as well, at 3,000 and onwards. And my point is, this is the price I deserve, right? Yeah. I know about Bitcoin since it was under $1. The thing is, I cannot. I checked emails at some point because I had emails from somewhere. It doesn't matter. But my point is that I was trying to check like a physical, digital proof of when I found about Bitcoin, right? Because my memory could be lying to me, right? I think it was under $1, and I was checking. It was definitely at least in 2011. And back then, I neither had the finance. I was neither, financially disciplined enough. If I was looking for investment, I would have looked for investment just like the people now in Dogecoin and so on, something that's gonna double, triple my money in a week or in a month. That's it, right? I was not thinking long term at that time at all. And again, so I know since then, and I remember that finding out about Bitcoin again and again over a few years and thinking, oh, I missed my trend. Oh, I missed my trend because if I bought, like, say, 3 months back or 6 months back, because you always hear during the big parabolic move up, and this is why it gets in your face. And in 2017, apparently, I was smart enough and I deserved at that time to proper study, educate myself, and start investing. And in 2019, 18, during the bear market, again, talking about purchasing at 3K, I was purchasing Bitcoin. One of the main reasons was like, I'm already in with so much money, if I'm gonna lose, I don't know, let's say 10K, putting another 1K would not make that much of a difference, right? So I'm just putting more money.
Thought, right?
Sorry?
That's what you thought, right?
Yeah, so my point's like, if I was putting money with the idea that Bitcoin shouldn't be dead, Bitcoin should have another bull run, I should be making really good purchases right now, but again, being down so much and being still with little experience, it was scary. And again, one of the factors was I have put already so much money, so if I put some extra money, like, big deal, right? Like whatever happens. But back then, we did not have Visa involved. We did not have Michael Saylor on the table. We did not have Elon Musk and Tesla purchasing billions of this. We did not have, since the B-word conference from a few days ago, we did not have Elon Musk saying that SpaceX has it. We did not have Cathy Wood saying that she's really long on MicroStrategy shares, on Square, and on Bitcoin, and on GBTC. We did not have Jack Dorsey endorsing it so much. So it was really, really scary in 2018, 2019, when the price was 3K. And this is what the people who didn't buy at 3K do not realize.
Absolutely. And everybody points at, like, well, you could have bought it at $3,000 in March of 2020. You had to have some balls of steel to be pulling off that transaction, and some people really did, and I commend them for it. I started buying in just before that crash. So a little background, I discovered it probably 2011, 2012, and fundamentally I understood the idea of it, and that the decentralized nature, because I'm a person who has used BitTorrent and other decentralized systems for many years, I understood that decentralized nature meant that so long as people didn't give up on it, it was going to continue. And it's going to be almost impossible to get rid of. And because of the scarcity factor, it was going to increase in value. Over the long time, it will be $1 million. I got that at the time, but at the same time, the risk of it going to zero was still real at that time. And so I didn't have anything to put into it. And it was just so complicated to get a wallet, to get involved in it. At that time, it was too much for me. The following cycle, it came back onto my radar. I was actually kind of a world traveler at that point, bouncing around from place to place. And so just like the following cycle where I had mentioned my finances weren't secure, I was working off of savings and questioning whether I wanted to hold on to that or risk it. In 2013, 2012 era, I was traveling and basically felt the same way. And so I missed out on it. But by the 2017 cycle, I became more convicted of it. I just didn't want to take the financial risk with the income or lack of income that I had at the time. And so it was really after the 2019 bottom, and I saw it come up to 13,000 and then cool off. And I was like, oh, well, if I have another chance, if you're going to let me in below 14K, yeah, I'm going to start stacking it up. And so that was basically Thanksgiving of 2019 that I started really taking it seriously, looking at the charts and planning my moves there. And then when it crashed in March of 2020 with the COVID crash, that really shook me to the core. And I thought that the economy was not going to recover the way that it did. I thought we were going to have either further downside or at least another chance. And so I sold a little bit before the crash and looked to average back in after the crash, but I did it too late because I thought it was going down lower. And that's basically the history of Bitcoin. You think there's going to give you another chance to go lower, but no, the risk is to the upside. And my strategy is just every paycheck I get, I pay my bills, and the rest goes into Bitcoin and Litecoin.
The last time I was asleep over money, over stress, was during the Corona crash.
Yeah,
because the Corona crash was in March and the halving was in May. And just before the Corona crash, we had a run up. And I was thinking, the halving is coming. We are having this run up. That's my last chance to buy in. And I had like a few hours saved up on my bank account. I've put everything in and I just had money for, let's say, 1 month more. And this happened like, let's say 10 days just before the Corona crash. And then the Corona crash happens and we drop to like 8K, to 7K, to 6K, to 4K. And it was extremely stressful. Again, the reason was because I've put too much money. I've put money I couldn't afford to lose just because I literally had just 1 month runway. That was it.
Yeah, and that's the feeling of FOMO, right? That fear of missing out. And that is going to return. A lot of people are doubting right now. They're saying it's going to go lower than 30. I think the sentiment is starting to rebound this past week or so. But there's still a lot of people that think it's going to go much lower and they're going to get a chance to buy lower, or they're going to get a chance to laugh in everybody's faces who bought it at 30K. I'm sorry, dude. The risk is to the upside. It's going higher. Whether it goes higher this week, next year, whenever it does, it's going to go higher.
Yep.
And I say that without any doubt in my mind. It's not financial advice, but it's just clear to me.
The asymmetric bet. Worst case, it goes to 0. Best case, it goes to millions. So if you buy 1 Bitcoin right now, the chances, let's say, even if we say 90% it's going to 0, sure, 90% you lose 30K. You have 10% chance to make $1 million off of it.
And that's the beauty of it. And that's what people don't understand. I think people who don't understand it, they think, okay, and this was even me. When I started looking at it, like I remember I found about Bitcoin when it was like $3, $5. Then I forgot about it. Next time it went to $200 and I was like, oh shit, this really exploded. I wish I bought it earlier, but it's too late now. And you don't understand and you think, okay, 200 is like over price and everything. And people from traditional background, or people who don't understand, they always think it's already too expensive. I lost the opportunity. I missed the opportunity, and I can't get in. And then it drops a little bit and think, okay, now I might. But then they sell too soon. That's also a problem. So they think, okay, we were at 60K. I think a lot of people will buy now at 30K, but they will sell at 45K, 50K. They are not expecting it to go back to, or not back to, but like to go above 65K. They're not expecting it to 100K, 150, maybe 200K. And I think that's the biggest point. That's the biggest advantage of people who actually understand Bitcoin.
Right.
Who actually are looking into those patterns and all of it to profit more.
There's 2 other things. Ego is at play because some people say like, I'm not going to buy at a higher price than you bought. That's the one thing. And the other thing is that I hear this argument many times. The people, the really rich people, the ones that are on top would never allow Bitcoin to succeed.
Right. Yeah. Yeah, the UK wouldn't let the US break away from it either. Revolutions happen.
And what's your opinion on all these new restrictions? All the European Union, the US, they try to bring in new legislation just to, I don't know, KYCing your wallets, your private wallets, things like that.
I think it's a bit of a shame considering the decentralized ethos, right? The goals, the vision of Bitcoin as a non-intermediary network. But in reality, it benefits the adoption. And I'm not afraid of regulation. To me, regulation is acknowledgement that this is not going away, acknowledgement that this is a thing. And regulation is setting the rules of the road. Traffic going this way stays on the right side. Traffic going that way stays on the left side. And the rule is, if you go the wrong way on the wrong side of the road, you're going to get smacked. Right. But I mean, the point being that the rules of the road are established, right? And then we can operate in them. And when the rules of the road are established, we can actually go much faster. And so if you look at regulation of other things, I think that cannabis is an interesting one to consider. In the United States, several states have legalized or regulated cannabis sales, and other states have not. And in those areas where it has been regulated, it's off the street corner. It's not being sold in the back alleys. It's being sold in a regulated shop with taxes taken out. And to me, that's a good thing for society. Same thing with Bitcoin. I think that Bitcoin will benefit from more regulation. When we say more regulation, that doesn't necessarily mean no mining in China. That is one kind of regulation. Another kind of regulation is if you trade Bitcoin, you still have to pay taxes on it. That's another regulation, right? And I think that having those rules of the road ultimately benefits the market overall.
I was going to say that just from today, the news just from today, Uniswap, the decentralized exchange, on their official domain, which is app.uniswap.org, I think, on the interface, right? Because that's just a front-end interface that interacts with the blockchain. It makes transactions for you. So they're blocking certain tokens from being traded. But all this does is it's a front-end filter, right? Well, on the blockchain, the smart contract is still the same. So therefore, if you make your own implementation, your own interface, you'll be able to trade these tokens. And now the question is Uniswap censored, is it centralized, and so on? No, it is a smart contract that executes as per the code on the blockchain. However, the blockchain code itself, like, you cannot censor it. It's on the blockchain. It's decentralized. But the domain name is registered on the name of a company. And this company has to follow the rules and laws of the country that it operates into, the same way that Coinbase has to, and that company has to, and so on. So to me, this absolutely makes sense. And some people are saying, like, people are overreacting, yada, yada, yada. And all this makes sense to me. The same thing with the regulations about if you purchase over $10,000 worth of crypto, when you withdraw it to a wallet, self-custody wallet, you have to confirm this is your wallet, right? In order to know where the money goes. I'm fine with that, and I get it. And the thing is, the companies, again, the exchanges, they're companies. They have to follow these rules. Otherwise, the uncle policeman is gonna knock your own door, and they'll shut down the servers. So I get that. However, what I'm afraid of, I'm sorry. What I'm afraid of is that what could happen in the future is that after I withdraw my crypto, right, to my wallet, I could go to a, how's it called, the Ninja thingy, or, the mixers, through one of the mixers, or let's say on Ethereum, there is one that you say 5 feet, 5 feet, 5 feet, and you wait some time and then you withdraw them. And with this, they get mixed, and therefore you can create a new wallet and move your coins there without being able to trace that you withdrew them, let's say 10,000 worth of Bitcoin or Ethereum, whatever, to your wallet, and then you change the wallet to your new anonymous one without anyone realizing that this is still you. My personal fear is, I'm fine with these regulations. I get why they're done. What I'm afraid of is that after that, if I want to sell this crypto through an exchange again, I'll have this issue, right? Meaning that they're gonna say now, where did you get this crypto from? And we have to prove the source, and then they'll say, because you used a mixer, now this is illegal crypto.
Yeah, that's an interesting idea. The point that you kind of made is that there's always going to be ways around it. So if it's not the exchange that operates in your country, there's VPNs and there's other manners. It's a decentralized nature. It's a open source software. You can build on it. And not to mention, let's be honest, the government wants to clamp down on the masses, but they always want to leave a backdoor for themselves. So there's always a way around the rules. I'm not advising anybody try to go around the rules or anything like that. I'm just acknowledging that that's a reality that we live in.
I agree. I think it's always the case that there is always a backdoor with everything, not with crypto or money. It's literally for everything.
Okay, so can we go to the basics? I just want to hear your thoughts, your explanation of. So we have the Fed and they print money. Why can't I print money? Why they can't print money? Who gives them the right to print money? Who is on top of the Fed? What is his agenda? Is it my agenda? Whose agenda is it? And what exactly happens when they print money?
That's a complex topic. Who's in charge is, I guess, not all that clear, not all that easy. Do they have our best interest in heart? I don't think so. Based off of hundreds of years of monetary policy that we've seen from countries around the world, monetary policy and central banking is a way to control the markets, control the people, not to enable the people. They may sell it as that way, but that's not really the case. They tell us that they're giving us money, they're giving us dollars with the stimulus check, but they're actually devaluing the dollars that are in our savings account. They're devaluing the dollars that we're going to receive in our next paycheck. And I had heard the argument made that if they can print money, why do we need to pay taxes? And I never really understood that argument until this absolutely massive wave of monetary inflation that we just had occurred. And it really made me wonder, if they can decide who to give money to, essentially whenever they want or whenever the crisis is right, why do we need to pay taxes? Why do I need to work for my money if you can just magic it out of thin air? And it reminds me of the game of Monopoly. In the official rules of the game of Monopoly, it says the bank can never run out of money. If you run out of dollars, just use paper. And that's really what we do, except it's ledgers now. It's digital. They just erase some digits or they add some digits. When it gets down to it, money hasn't been real since we got off of the gold standard. And you say, why do we trust it? Well, because we have to. And so long as people do, it maintains its value. But now we have an alternative that people are learning to trust. And they're learning to distrust the intentions of the central banks that are devaluing the money in their savings. So I think that it's kind of a matter of time before this trend really continues. We're going to see a migration of gold investors. We're going to see a migration of bond investors. We're going to see a migration of 401k retirement investors. We're going to see a wave of cash saver investors moving to Bitcoin because it's not controlled by those central banks. It's not manipulated, and it's at less risk of their interference.
And you mentioned gold-backed dollars. I think that happened in '74, if I'm not mistaken.
Right.
And there are like many charts flowing around, like what happened in '74, and you can see the costs skyrocket, the salaries they just stagnate. Like you could see, like there is everything up to that point, like salaries were going up, costs were going up, like everything seemed more or less aligned. Obviously, up and down, but it was aligned. It was going in the same direction. From that point on, you could see there's like a massive deviation started to happen, and it just the gap is just widening and widening and widening. And I think that's what Bitcoin tries to solve.
Absolutely. And that kind of trend is pernicious. It happens in the background, and people don't realize that last year they were paying $12 for a burrito. This year they're paying $15 for a burrito. And I also kind of find it interesting that during the lockdown, we've been trained to pay more for things because we've had more delivery. We've had more direct services. So we kind of became accustomed to paying higher prices even without the inflation. We thought that there was a reason for it. But then when we go back to the restaurants, the prices are going to be the same, and people will just write it off. They'll expect it, that they'll continue to operate it as normal. And it's just like that frog in the pot of boiling water I mentioned earlier.
Yeah. And it's the printing money is basically stealing from how much money you have,
right.
Small percentages at a time, and you never notice. Like if I steal you 0.1% from your portfolio every week, you won't even, no one will notice,
Absolutely.
right? And that's inflation. That's what inflation does. That's
in ancient Rome, when they could no longer expand their territory in order to increase what is essentially the country's GDP, what they did was they started shaving little bits off of their coins. And that was essentially a tax. And so the literal currency became worth less because there was less gold, there was less silver, there was less copper in that. And the merchants at first were screwed by it until they realized what was happening, and they raised their prices also. And so that compounding effect led to, many people would say, was a big factor in the fall of the Roman Empire. And if you look at the life of currencies, they typically are dominant for just 100 years or 200 years, and it's about time for the US dollar to find an alternative. Since 74, we've not only gone off the gold standard, we've basically adopted a petrodollar standard, with OPEC and the regulation of the price of oil being the thing that maintains stability, financial stability throughout the global markets. And the relationship between the US dollar and OPEC, the oil producing nations, has been very significant. And we'll see when that market is no longer denominated in dollars, that's when we'll really have the new currency, whatever it will be.
And what's your opinion on Chinese currency? I mean, some people are saying, okay, in 5 years, Chinese one will be the number one priority. It will be number one currency in the world because China is growing incredibly fast. Even now with COVID, they were the least ones impacted and everything. So people are saying, like, yeah, Chinese currency, this will be the world reserve in near
future. That's definitely a possibility. It's something that I have considered as a possibility. I don't think that it's any better. If you think about their monetary policy, it's centrally controlled just like the US is, and they manipulate their currency in order to be able to price their imports and exports in their own favor. They have programs where they give money to their friends and the institutions or the organizations that they want to support. The US does that too. It's just even more so, more intense, more centrally controlled because they're a more authoritarian government. Whether or not they will be the next world currency remains to be seen. They're definitely making strides. I know that China has a very forward-thinking geopolitical perspective, and they operate off of these 50-year plans, these 10-year plans, whereas here in the United States, we're squabbling over whether or not we're going to increase the deficit in the next week or so. We seem to just deal with the same problems for decades rather than actually advancing.
I think the longest vision in most of Western countries is like just until next election. That's it. Right.
Yeah, and if I'm halfway through my term, then I'm no longer legislating. I'm campaigning.
Yeah.
And only if you're not going to campaign and run for another term do people actually vote their conscience, it seems, in Congress. I know that's a really cynical view, but it's the way it seems to me.
Yeah, I mean, I'm not saying I support what China does. I'm saying the way they strategize what they're doing is definitely a better way of doing things than what the West is doing, when just what can we do in 2 years, 3 years, and then no vision beyond that point.
I also find countries like Singapore very interesting. That's a hub for finance in that part of the world. They are authoritarian, but on the rankings of national corruption rate rankings, they rank one of the lowest in terms of corruption. And it's remarkable to see an authoritarian government working in the best interests of its people and succeeding by and large. They've increased their standard of living for their people significantly over the past 20 years. And so it's really interesting to see that kind of mix of authoritarianism and freedom. Would I want America or the UK to be like Singapore? No, and I don't think it would work. The populations are too large. Singapore kind of works because it's a smaller population. I'm of the opinion that governments in general struggle to operate well, efficiently and effectively for their people. Plamen, efficiently and effectively, different words, right? But the problem is that when we get beyond the tribe, rules are much harder to enforce through culture, and then we have to rely on punitive measures in order to enforce rules, and punitive measures only go so far. Culture is really what determines how people act. And so I think that China is very smart in controlling not only their currency and their access to information, but also controlling the culture. Here in America, we have more freedom of expression, not necessarily total freedom, but more freedom of expression. And so that's going to be much harder to do here. Is one better than the other? I don't think so. I think that we should have both in the world.
Don't say you said that Dubai, I already put the thing in front of the carriage in front of the horse, but you said that Singapore have done well. What about Dubai? They also have this
Sure.
how's it called? Like, what are they? Like a kind of monarchy, but not really, whatever it is anyway. But my point's like, I've just went to Dubai for the first time in my life, and I was like blown away by the fact that 60, 70 years ago, there were like tribes with spears and knives killing each other, walking with camels and eating two things, fish and I don't know how is it called in English, the other thing.
Dates.
How? Dates, yeah, so dates. Yeah. Anyway, so that plus fish, that's all they eat. And today they have McDonald's, Burger King, they have everything there. Like they have watermelon, they have this, like everything. And they have the skyscrapers and whatnot. And all of this, obviously, yes, thanks to the petrol part of it, then eventually because of tourism and so on. But my point is, there were proper leaders that were not corrupt and were really thinking the best for their people. And about politics, absolutely what you said, that after half your term is gone, that's it. You're campaigning after that just to get in power again. And this is so broken. And that, the worst part is, you don't even want to do anything, especially in the last 1 year, because if you do brilliant and you lose the votes, the next guy is gonna get, you know, all the fruit from your hard labor. And he'll be like, do you see, thanks to me, we did this and we did that. Even though he did not, you know, like plant the seeds, it was the guy before him. And this is such a broken system.
Interesting point. I wanted to touch on the fact that, first of all, I'd love to go to Dubai. That looks really interesting. I bet you enjoyed your time there. But Dubai, like you said, was able to capitalize on its natural resources and then implement a plan to distribute that, the value of that natural resource more equitably, rather than consolidating it only into the power of the royals.
I'm sorry, just a second. Sorry, just now is the moment to mention it, because exactly what you said, I was thinking to mention it or not. But in there, when I was there, I found out the following, that there is a law, a local law, that a company, every company registered there, and you have to have a company there registered in order to operate, has to be owned 51% by a local. And my point is that the sheikhs, you know, the kings, whatever, they could have said, I'm gonna own 51% of all the companies, but they didn't do that. They said any local, and they have like 1 million of local population. And my point is that there is now economy of these locals trying to outbeat each other. Like one of them says, like, I'm gonna register the company, you know, in my name and give you, you know, rights to operate here for, let's say, $10,000. And the next guy is like, okay, listen, I want 15,000, but I have better connections with this, and this, and therefore it's gonna be easier for you to operate, and so on. So there's literally like a market right now for who is gonna sign the papers in your name.
Absolutely, yeah, and that's very novel. Licensing, and it's so good that they require 51% owned by a local. What I was going to say was they are able to distribute the value of their natural resources, petrol, oil, that is there. Alaska has a similar program. If you are a resident of the state of Alaska in the United States, you actually get a check either every year or every month. That is a portion of the proceeds, the tax money that they were able to generate from the oil companies that are there. And it's basically a trade-off of, we're going to continue to allow the oil companies to operate there, but we're not going to consolidate that and give favors. You actually get a benefit from that too. And I heard the recommendation, and maybe it was from Michael Saylor, I can't remember who suggested it, but that with El Salvador, that Bitcoin could do that for their volcanoes.
And just to mention, Norway has a similar model. So they have a government fund, which is funded by all the oil and natural resources. I think it's one of the largest per GDP per capita funds in the world. And apparently they have so much money that, like, for next generations, they're their budget, like the government budget, is covered from there. Like, it's insane.
And you could do that with their hydro or their geothermal, because they have all these power resources. And the beautiful thing about Bitcoin is that if you have power available, you can translate that into value. And even if that electrical power or that energy is marooned somewhere far away from the population, where you're not going to have an incentive to put in some kind of infrastructure to generate that power, to capture that power, because it's so far out. That's why China was such a popular mining place, because they overbuilt their infrastructure in places where they didn't have any people yet. There were these huge hydroelectric dams, and there was electricity available at low cost because nobody was using it. So now you do the same kind of thing with a geothermal geyser or tectonic plates or volcano, solar, wind, any of these. There is power available, and we can create revenue. This could be an entirely new kind of model for countries to do something like Dubai, to do something like Alaska, Norway, and to do that with the natural resources that they have to be able to capture some of that value and distribute it to their people however equitably they deem best. Do you guys remember who might have said that? I don't know who.
No, I haven't heard it myself.
I think whichever country starts buying Bitcoin as their, like, I'm not sure what exactly El Salvador is doing, but like whichever country, small country, I think big countries is different, but starts buying Bitcoin as their reserve or something, and does it in a meaningful way. Meaningful meaning not 0.000 something, which doesn't change anything. They really have a shot of like Dubai. Like 70 years ago, they were nothing, and now look at them. And that can become their natural, in quotes, resource, right? Because they bought it at this point, and if it's 10x or 20x or 100x.
Well, my point is that if they don't have cash reserves to buy Bitcoin, they can turn stranded energy into Bitcoin.
Yeah.
El Salvador, it was during the vote that the president was on Twitter, and I'm in a Twitter space with him and other people, and somebody suggested, have you looked into mining it with volcanoes? And he's like, no, I haven't thought about that. Is that possible? And literally the very next day, he's getting a valid proposal to do that very thing. Like, things can move pretty quickly with this. Not to mention that when you look at the way that El Salvador is doing it, as best that I can understand, they're not taking a treasury of Bitcoin, but they have a treasury of dollars that is going to, or a trust, I should say, of dollars that will enable Bitcoin to dollar transactions for people who receive Bitcoin but don't want to hold Bitcoin, right? So the law is everybody has to be able to accept Bitcoin as a merchant. But if you accept the Bitcoin and you would rather offload that and take the dollars for it right now, the El Salvadorian government has a trust that will enable that transaction. And so in a very clever way, every person that says, I don't want to hold Bitcoin, I want to hold the dollars, that's their investment in Bitcoin without having to make the purchase, right? And so then they can begin to accumulate Bitcoin through there. And if people start trusting it more, there will be fewer and fewer. But that value is going to grow even if the dollar decays. So that's a pretty smart way of doing it.
Yep, I didn't know. I knew about the conversion. I didn't know how it's going to work. So you're saying that the government provides the money in the trust, that they're gonna buy your Bitcoin. Like, let's say I go there and I want to buy this drink, and let's say it costs $3. So I pay with Satoshis because I'm a Bitcoiner, and the store owner is like, yeah, sure, but I don't want Bitcoin. He accepts the transaction, instant transfers to dollars. Where does the dollars come from? I didn't know that. I thought it's being sold directly on the open market. What you're saying is that it's coming from the from a government treasury fund or whatever, and then they're hodling to this Bitcoin, right?
That's my understanding, yeah.
And with time, more and more people will stop wanting to convert and are just gonna hold the Satoshis themselves.
Right, and I think that that's exactly what PayPal is doing. I don't know if PayPal has enabled, at first when PayPal enabled crypto, what you could do was you could send or you could buy something with crypto. You could buy something with Bitcoin. And what they were doing was they were actually enabling the delivery of dollars when you send Bitcoin. And so I think that their strategy is probably similar. They are willing to receive as much Bitcoin and give away as many dollars as they can. Then they're not having to buy it on the open market. They can just collect it, right? It's like the baseball team that said, I believe it's the Oakland Athletics in California. They said that we have box suites available for sale, and we will sell one for the price of 1 Bitcoin. Do we have any Bitcoin? No. Do we want to buy any Bitcoin? We haven't figured that out yet. But if you want to give us Bitcoin, we're happy to receive it. And I think that that's kind of the adoption that we're going to see slowly but surely really grinding out. And people are underestimating that model.
I wanted to ask you earlier when you said that years ago, Bitcoin was much riskier than it is today. And you said that you've been telling to your friends and family that it's not a bad idea to purchase some Bitcoin. So how is that going? Meaning, did you get any friends and family to purchase into? Are you seeing a lot of people? Oh yeah, I have
a small Discord group that my friend set up. I got one or two of my friends in, and they were making jokes. They were saying, "Oh yeah, well if it does well, you can advise us on your yacht." Right. And then sometime early 2020, they were like, okay, I get this. I've studied it. I've looked into it more. I see where it's going. How do we do this? So I helped them out, and I've still been evangelizing to my family, who loves me but doesn't always trust me, I guess. They're probably watching right now, listening to me say that, but you know that you haven't bought enough, and I'm telling you. Anyway, so my friends have invited their friends, and I've probably got about 55 or 60 people in this Discord group that are just literally just people that know people that wanted to be a part of it. And I know there's people on Twitter who are going to be watching this asking if they can get in there, and I'm sorry, it's invite only. It's not because we share secrets of the universe or anything like that. It's just that that's the community that I want to keep there. But the point is that people are getting it. And I've generated quite a bit of Satoshis off of referrals from Coinbase, because it's easy that once I'm on Coinbase, I can share my referral link with them. They understand it better, and then they make their first investment. They get $10, I get $10. And what I actually did was, for a while at the beginning of the year, I incentivized my friend. I said, I will give you $10 in Bitcoin if you invest $100 in Bitcoin. And I know that sounds like kind of Ponzi scheme or something like that, but the economics work out pretty well, because since I'm getting $10 from Coinbase, I'm just going to give that to them. It's no loss to me. And that brings another person into the ecosystem. And so for their $100 investment, they automatically got a 20% increase in their investment, not in the value of their investment, but increase on top of their investment. And that's a pretty sweet incentive. And I would encourage anybody who's listening to this to consider that. Use your referral link to help incentivize other people to get into it. Because the bigger that the network gets, the more people are going to want to understand it. They're going to hold on to it longer. That's really just what adoption is. So I'm doing my part small with my friends and family. I'm doing my part big on Twitter. I was 200 followers just 6 or 7 weeks ago. Now I'm at almost 12,000. It's because the information is important. People are getting excited about it. They want to be involved in it. It's just an inevitability, right?
Yeah, I was going to say, literally at the bottom of the Bitcoin bear market in 2019, January, I had friends over from London, from UK, and we went skiing in Bulgaria. And I told them, listen, when Bitcoin hits 100K, we're going on vacation for a week, all inclusive my expenses. Back then, Bitcoin was 3,000. And I said, at 100K, we're doing this. And it sounded like, maybe when I'm 60 years old or something. Right. And now it sounds like more real than ever, like it's coming. Right. And the same people, they did get into crypto now in 2021. Of course, after the big run up, and I don't know, like 30, 40K, maybe some of them at 56K, I don't know. But my point is that these same people, they did get in. And with one of them, we even have a bet if Bitcoin hits 100K by end of the year. If it doesn't hit, I own him 2,000 pounds. If it does hit, he gives me 1,000 pounds, and he already gave me the 1,000 pounds because he trusts me, right?
Wow.
He already gave me the 1,000 pounds, and I already purchased it in Bitcoin. So the bet is pretty much like if you don't hit 100K by end of year, I have to return 3K back instead of just the 1K and 1K extra.
That's fun. Yeah, I don't take bets on it. I just invest in it. So that's like, I'm already all in. I don't need to take bets outside.
Yeah.
I think if you're not 200% in, do you even believe in Bitcoin?
Well, I was telling my friend, the bank keeps sending me these offers for 0% interest financing. And I'm like, the idiots are denominating it in dollars. Do they even understand what's going on? You're going to give me US dollars, and I have to pay you back US dollars. And there's a thing called Bitcoin. Yeah. Like, I don't need to really draw too many too many obvious lines there. It pretty much illustrates itself.
And that's what Sailor does, right? But on a much larger scale.
Right, right.
Yeah.
All's right on the table.
In the audience, they ask, what games do you play?
Okay. I'm not one for online competitive gaming. I remember playing Counter-Strike with my friends in the internet cafe, but it's just too wild. So I like single player games primarily, big open worlds. I'm completely immersed in Red Dead Redemption 2.
Okay.
I look for a discount, right? I'm not buying at the peak. So I didn't buy Red Dead Redemption when it was released. I waited for it to go on sale, and I only recently got it. I did that with the first one also. Grand Theft Auto I'm a big fan of. Other than that, I really like Cities Skylines. That's a really fun way to get my creativity out and build a city.
Nice.
What about you guys? Do you play any PC games, video games?
I'm too old for that.
The more that I get into Bitcoin, the less time and desire I have to play with it. I stare at charts way more than I play games nowadays.
And that's also sort of a game. You have to look at it like it's...
Definitely. It triggers a lot of the same things.
Definitely.
I was gonna say Alesh is not too old. He just didn't grew as a gamer, I think, because I know.
I did. 20 years ago.
Okay.
Yeah.
Oh, okay. As a kid, I played a lot on Nintendo. I don't know, it's called Nintendo in English. I think it is. You know, the console. And then I moved on to PC games. The first PC game I played was StarCraft. And coming from, Contra, where you just move right and left and you jump and you shoot, to StarCraft, where you have, the workers go get minerals, get gas, build an army. I was like mind blown what the PC games are capable of. And then, I constantly played mainly RPGs like Diablo, World of Warcraft, and so on. And up to this day, I do play, like even Minecraft. Like I love Minecraft. It's such a cool game. Every year, let's say for a week with friends, though I'm a social player. So with friends, we always start playing Minecraft, build a base together, yada yada yada, or RPGs. But again, the same thing. The older you get, it's not like you don't enjoy it anymore, but you just have too many responsibilities and too many other things that are just more important. And and let's say even being healthy, physically healthy, like going to the gym, like it takes time. I have to walk to there. I have to do the exercises. Like that's 3 hours of your day. Like if you have to do it 2-3 times a week, it takes time. So my point is you add so many additional things on your table. If you have kids, it's even worse. This and that. There's so many responsibilities. It's just like...
Exactly. And I did play. I played Quake. I played StarCraft. I played Warcraft. I played all of them, but I was young. I didn't have other things to do.
Those are some classics, though. Those are some really great games.
Yep.
Any other good questions?
Well, here is a question that I kind of asked, but we didn't per se get a clear answer, and it's being asked now in the chat. And also, actually, there is a secondary tail to it in the prepared question. So it's about the bull market, the cycle top, and so on. So just a second. In the chat, the question is, I'm really sorry, just a second. Okay, so the question is, can you give us an example of exit strategy when people are even selling their houses to buy crypto at the same time? Meaning, when the real FOMO begins and people are mortgaging their houses, to purchase Bitcoin. And just a second, so from my notes though, and earlier that I was talking about what I'm afraid of is selling too early and then being unable to purchase a bigger quantity Bitcoin and still having some money left. That we gave the example that if you sold at 10K 2017, you really did well. Like that's not a bad price, just 50% off the top. But then the correction is only, I mean, 85% doesn't sound that bad, but you could have found back in a 10K and it didn't make any, multiplication of your Bitcoin. And now if we expect a even smaller bear market, meaning not 80-85%, but 60-65% correction, this means that if we hit 300K and we go only down to 150K, you might not be able to repurchase more Bitcoin unless you play the market very well. And just second, so last thing adding to this it's all together. Where do you expect the next bear market to be? If we hit, let's say, numbers at 300 or something like that, like a lot of my audience, like I have this famous saying, when we were at 60K, I was saying, in my opinion, 60K is not a bad price, and then we dropped to 30K. But what I meant though was that 60K is not a bad price, because I was thinking back then the next bear market should be around 60K, having in mind that the 2013 we finished at 1,000, and then 2018 the bear market is 3K, so this is 3x higher. So 20K multiplied by 3x is 60K. So if it repeats, kind of repeats, 60K, it really doesn't sound that bad. The same way that buying at 3K during the 2017 bull market, you really didn't that bad.
Yeah, I mean, the most simplest and direct answer to that question is just continue accumulating.
Okay.
I mean, I know that the way the question was phrased was, if I'm going to sell the tops and buy the bottoms, how should I do it? I consider just continuing to accumulate. Maybe you don't accumulate anymore when it's really high. So like at the 5x multiple, when if it's above this red line, you're not buying anymore until it gets back in here. Ideally, you want to buy in really hard in here, but it wouldn't be a bad idea to be buying here too, because we never, once we broke above this level, that's the 6.0 level, 0.618 level, we never returned. So like even buying on the way down isn't a bad thing either. This is under the assumption that you have some kind of income, or you're able to generate some money to be able to invest. But continuing to dollar cost average, like, yes, if you want to play the game, then you try to sell it above the 5 multiple and sell it above here, buy it down here. In theory, that pays off more, but if you are patient, a smarter way to go about it is just to continue to buy, because nowadays buying at $17,000 doesn't seem like such a bad idea, and that was only a few years ago. You can look at any time period on the Bitcoin chart. There has never been a single person who has bought Bitcoin, held it for 3 1/3 years, so 3 years and 4 months, and was at a loss ever again, right? And it's such a short time period in our lives. 3 years, 3 months, 3 years, 4 months. That's the worst case scenario. I don't feel good about trying to put forward any strategy to time the absolute peak and time the absolute bottom if the assumption is that you're not going to hold in between. Just keep getting more. And if you don't, I'm going to. And then it's going to be more expensive when you figure that out. It's like Michael Saylor says, yeah, I bought Bitcoin at $60,000. I'm buying it at $30,000. I will buy it at $100,000. It's going higher. It's just a matter of time. If you want to try to trade it, you'll have to come up with your own strategy, I guess. But I think that the 5x 2-year multiple and the 2-year multiple are pretty interesting guidelines. And you mentioned the pi cycle. That's one we're going to be looking at for the top this time too. But again, I'm not selling all of my Bitcoin. I'm taking profit. I'm going to reinvest that profit, but I'm not selling the whole stack ever.
Okay. Because you have your screen shared already, could you please Google something? So could you check the number of addresses that have 1 Bitcoin or above?
Sure.
So like Bitcoin addresses with over 1 Bitcoin. Something like that.
Yeah, I'm gonna do it on a different window here.
Okay.
Actually, if we can get a chart. This should be on Glassnode.
So how many are there? 653,000? Is that correct? 653,000, correct?
Yes, only up to 10. If you include more than that, then it would be 700, 800,000.
800,000, let's say. Okay, 800,000. Yeah. Because there's one question being asked and asked again by one annoying viewer. Because I know what he's thinking, but in my opinion, he's just wrong of thinking that way. His question is, if Bitcoin hits $1 million, won't there be too many millionaires? So can you Google how many millionaires are there? I know that there are around 45 million millionaires right now. That's right. I know it's about that, but let's Google it. Let's have the visual proof. How many millionaires are there?
Worldwide.
It's about, everyone can Google it. It's here, it says 56 million. Like, I don't care, but it's a lot. It's definitely over 40 million millionaires. So Bitcoin,
and this number has increased in 2021.
Yeah, and constantly increases, obviously, of course. So can you go back to the Bitcoin rich list? So at the moment we have 800,000 Bitcoin addresses with over 1 Bitcoin. But the thing is, my point is the following, that everyone sells portion of his stack the higher that we go, because he wants to work in these profits. There is only a very little amount of addresses that only accumulate, and throughout the years have only more and more Bitcoin. Most of them get distributed across more and more people. So my point is that what I would expect is that when we hit, if we hit $1 million per Bitcoin, these 800,000 addresses will become more like 500,000 addresses or less. Sure. And therefore we're gonna have another 500,000 millionaires. Dude, we already have 50 million millionaires. So no, in my opinion, we're not going to have too many millionaires if Bitcoin hits $1 million. What's your take?
I mean, if inflation continues to rise, then we would naturally have more millionaires. It's just going to not buy you as much. It's not going to buy you a McMansion in California anymore. It's going to buy you a property that's much less appealing. It'll buy you less Bitcoin. It'll buy you hopefully that things like bread and cheese don't hyperinflate, right? Because we're able to control those prices a little bit better. But things like asset prices are going to go higher.
Absolutely. And
everyone in Venezuela is a millionaire. So that just tells
exactly.
You. Yeah.
There was this, I can't remember where I heard it recently already, that pretty much at the moment in US, majority of people who have a property to live in and a second one that they're renting, their assets are worth over $1 million.
Right.
All right, so I think that we went pretty much over majority of the questions. There is a question about Ethereum and the Fibonacci. Does it work also on Ethereum or not really?
I've played with it. It doesn't seem as consistent. It's the Fibonacci, the 0.618 and the 1.618. These are both golden ratios. You can find them throughout the chart on the minute scale all the way up to the weekly and beyond. I haven't found a consistent pattern like I found with Bitcoin, where it was like each cycle, it hits this level, then it moves on. I haven't found that with Ethereum, so I haven't really published anything on it, but it's still a valid tool to use.
I see. Yeah, I think in Ethereum, with Bitcoin, we have the stock to flow because we have very specific issuance and so on. And we said that it's like, it's a mixture of McAfee flow and stock to flow and so on. And with Ethereum, I feel like it's more of a networking and more of a what is built on top of Ethereum. Because especially when it becomes proof of stake, if you have a system there for NFTs, a system there, like a platform like smart contracts on about, like real estates. I really think that all the real estates should be on the blockchain. They should be NFTs and so on. This is how we transfer ownership of them. And my point is that if we have all of this, and we have a lot of assets being recorded on top of the Ethereum blockchain and a lot of precious data that you have to be able to trust it. If it's on top of the Ethereum blockchain, this means that the Ether token price have to also go up in price correlated to the importance of the information recorded on the Ethereum's blockchain.
And if ETH the token ETH is used as a part of those transactions for minting those blockchains, for recording that data, then yes, that each ETH token has value in order to.
Not only that, but my point was that it's about the proof of stake and being the protection of the network. If ETH is just worth $1 and we have 100 million ETH, this means that for 50 million you can do a 51% attack of the network, right?
Yeah, to be honest with you, I am still learning about the mechanics and the outcomes of proof of stake. So perhaps you understand that a lot better than I do.
Just like with proof of work, if you have over 50% of the mining power, the hash rate of the miners around the world, you can do a 51% attack. And with proof of stake, it's very similar to the stakers. Like if you control too much of the supply, like you don't need to control 50% because at the moment it's staked like 5% or something like that. Let's say when we actually go to proof of stake, it's going to be staked 20-30% maybe of the Ethereum tokens. So if you buy like 20, you'll be able to pretty much do 51% attack. So this is why I'm saying that the more valuable data is being recorded on the blockchain, the more valuable the Ether should become, because it has to go up in price in order for the people to be able to trust the network. Because if just with 2 billion, you can do a 51% attack, like, that sounds quite a dangerous place to record your data on.
Interesting. Well, then, so it kind of sounds like it's not a causality, but a prerequisite.
Yeah.
Yeah, I'm definitely learning more about it, and it's one of my bigger holds. It's definitely got the largest, a fairly secure risk reward attached to it.
Yep.
Especially now after the
EIP 1559.
Yeah.
Okay. Well, I would suggest to end the podcast with one last question on how do you foresee. Can you please stop sharing the screen?
Yeah.
How do you foresee the upcoming years, the development of what do you expect to happen? And what I mean by that is, we know that CBDCs are coming around the corner. We know that with CBDCs they'll be able to see the government, like the central authority, doesn't matter if it's the government or whatever, but the central authority will be able to see every single transaction. You'll be able to do like a micromanagement of everyone's account. Like let's say, write a script that if you haven't spent more than 50% of your income, all of a sudden you get negative interest rate to stimulate you to start spending. Let's say that if you don't
personal monetary policy.
Yeah, exactly. Personal monetary policy. Yes, this is what I meant. And also having in mind that the heavy printing that happened in the US for the past 12 months and most probably will continue to happen for the next 12 months with the 6 trillion government spending being planned for 2021, with the US debt clock adjusted today at 28 trillion and getting really close to 30 trillion, with the debt to GDP ratio now 130%. Having all of this in mind, having in mind Michael Saylor and his push for institutional adoption, having in mind the Cathy Wood and Jack Dorsey endorsement, having in mind what happened in El Salvador and so on, all of these factors, what absolutely obviously no one can tell the future, but what do you expect most probably is going to happen in the next 5 to 10 years?
Number go up.
Makes sense.
All of that combined, you illustrated a beautiful reason that number go up. It's such wild times. I remember 2008 and thinking, wow, could it get any crazier? When in 2001 I was thinking, wow, could it get any crazier? Here we are in 2021 thinking, wow, could it get any crazier? And I was just red-pilled on like the NFT community, and not the trading cards, but how you can get access to whole digital economies if you have a certain NFT. The coming world is going to be so much more digital. We're going to have entire, like the gig economy of having Uber drivers and food delivery and stuff like that. That's going to be online. We're going to live so much of our lives, maybe not every person, but a significant portion of the population, even more so now, is going to live online. There are communities being built with three-dimensional virtual reality environments where they can play games, they can show art, they can entertain each other, they can build crafts for each other and get compensated for that. They can have a digital economy and not rely on the physical economy. And that is a really, really wild place to be in. And I just think of the old English expression that, they say is a traditional Chinese curse, that may you live in interesting times. Well, interesting times we do indeed live in.
Amazing. Alice?
Yeah.
Any final words? Thoughts? Not really? Okay. Well, I thank you so much for your time. I think it was an amazing podcast. We've shared a lot of ideas and thoughts.
Yeah.
And I really hope that you're going to come and visit us again, possibly at the new all-time high when we cross through 70K barrier.
Sounds good. It was really a pleasure to get to know both of you. Thank you for this opportunity to share with your audience and to get to know both of you. I'm very blessed by God to be a part of your community, part of the broader crypto community. I really, truly think that we are bringing light to people. We are bringing truth to people. We're bringing opportunity to people, and I am driven by that motive. And I greatly appreciate you giving me the opportunity to help me do that. So much love and good fortune to both of you and to all of your audience.
It was such a pleasure having you. I really enjoyed this podcast.
Until the next one.
Yeah.
Cheers, guys, and good evening to everyone. Bye.
Thank you, everyone. Bye.
Ciao.